Two, one, two, one, two. Wow. I was just literally had a monologue describing nothing to myself. Great. Anyway, I got my mic working now. So first things first, I'm explaining why I was in that buy trade for Euro USD step by step. So starting off with DXY. DXY is the dollar index, is the dollar against multiple currencies. So you can see we have this fib drawn from this high to this low, which is the extremes, right? And it's the extremes of the high and low on a daily time frame. Okay, that's important. And you'll notice a couple of things. So last week was actually bearish up until this point because we saw relative equal lows right here. This candlestick low, this candlestick low. These are the lows, which is marked out by this maroon horizontal line. So we're bearish, planning for price to take out this low. It never actually does end up doing that. And we can then see price reverse. So I was bearish, lost a bit of trades, quite a few trades here. And then we eventually accepted that it was bullish. And then we now started being bullish, but we needed a target. I am never bearish or bullish without a target. You can't be bearish or bullish to a target because the idea of trading is that you're predicting price to get to an area. If price does not get to that area or doesn't have anywhere it's going, then there's no bias. There's no bias because where's it going? Where's your bias towards? If you're biased to someone, there has to be a reason. For example, you may be biased to a certain race for a certain decision. Let's say you're biased to a white person. Well, you need a white person to walk to the door, or at least a white person to exist to have that bias. You might be biased to somebody that's nice to you, or a black person, right? Or a woman, or a man, or male, or female, whatever it is. You could be biased to something, but the only way you can be biased to something is if that thing exists. The same way, if you have a bias in trading, there has to be an existing target, an existing goal, an existing thing that's making you biased. So we're bullish on this point, but the only thing that's making us bullish is, first of all, the rules and the target. We have this bullish imbalance right here, or this imbalance that's in the premium, because when price gets to something, a key area in the premium, which is low hanging fruit, I should expect at least a reaction, if not a rejection, right? So we're bullish, cool, we're bullish, bullish. Price creates this fair value gap, breaking these previous highs, which showcase that this is not a average move. This is a displacement, but showcase and gives us extra confirmation that it is indeed bullish. So we had the markers on the shift, but that's not enough. We didn't have a confirmation. Now on the daily time frame, if we had the markers on the shift by itself, but there was no target, you could argue is bullish, and because it's DXY, we can be a little bit lenient. But when it comes time to enter an indice, an instrument, a pair, we're going to have a target. Otherwise, what's the point? If we don't have a target, it's a rule. We're not bullish or bearish. So we're bullish. We create these multiple fair value gaps. We have this one, we have this one, and we then have this imbalance that we are targeting. Why are these fair value gaps? Because of the three candlestick pattern. 1, 2, 3. There's this space between this candle's high and this candle's low, which is the first and third candlestick. This orange box is also showcasing the imbalance from overnight, from Thursday to Friday. That overnight gap is showcased by this orange box, which is within this fair value gap. So that will be my low hanging fruit. So if DXY gets here, I would look to take out at least the first lots of my contract. If I believe price can go further down, then I will maybe re-enter, hold some of my trade, close most of my trades here is definitely going to be the goal, because you can see it's an overlapping zone of this imbalance and the fair value gap. So that creates my bias. We are bullish up until this point. From this point, which we reached today, which is part of the accumulation or the manipulation, I'm now bearish. That was then confirmed on a smaller time frame when you then have a taken of this swing low right here. Price gets this area, closes below this swing low, and from that moment onwards, I'm bearish. And then I'll be looking for price to retrace into fair value gaps. Maybe here, coming back all the way down here, retrace back up into, and it's now starting to displace again. And you know what happened? We created another fair value gap from here to here. I'll expect it to come down here, maybe come up here to then continue down if it wants to, or to use that as an inverse fair value gap. Either which way, that's what created our DXY bearishness. So we're bearish on the dollar, which means we're bullish against it. So it pairs like this, we're bullish. So let's start with the daily time frame again. So EU on the daily time frame, you see how we're now one of the things when we started to implement this strategy from the 1st of May, or I think it was the 2nd of May, we had a mistake of treating each time frame as different information. We were not consistently traversing or translating information from the daily to the hourly to the 15 to the 5 to 1. So I was then, every time I went from one time frame to another, I would change my whole identity or my bias or whatever it is, which was the incorrect thing. So I now assign certain time frames to certain types of decisions. So the daily time frame, we start off, and there's something we see straight away. We see this high and we see this high. What do you notice? This high is lower than this high. This high right here is lower than this high. So we see a failed high. So we can see price is bullish here, right? Comes down to this area, and then it pushes up, but it fails to create the high. We know it's a failed high because we take out this swing low with this candlestick right here. On the Thursday, last week Thursday, we take out this low. So we are bearish from that point onwards because we have taken out the low. Now we came back down, and what are we coming down into? A fair value gap. You can see right here, you have one fair value gap right here. There is one down here, as you can see, we marked it, but there's this one here, which we marked with this maroon space. So let's go over what we just said. We have this high, a failed high, so it is a sign of bearishness. We then displace downwards. You can see because there's imbalances. In that displacement, we take out swing lows. Took out this low, took out this low. Bam. So we took out this low. We are now heading towards a fair value gap. So we drew that with the maroon lines. If you look in a little bit closer, you can see from here we've displaced strongly into this area. I don't know if do I have a fib drawn. Okay, I don't have a fib drawn. If we draw a fib from here to here, we're in the discount, which is where we want to enter buys. If you draw from this extreme to this extreme, we're in a discount from where we want to enter buys. If you draw from this extreme to this extreme, we're still in the area where we want to enter buys. I would never really use this. But you can see we just, like, no matter which area you use as your area, you will see that we're always at a discount, right? So in the discount, which is where you want to be entering buys, this is the fair value gaps. This, we then draw to translate to the other time frames. But I've drawn one line here because we've now come all the way into this. So if we remove this, you can see this is the fair value gap just on the 4-hourly time frame. Okay. See, that's the high of the first one, the low of the third candle, which is the fair value gap. And you can see it's now across multiple time frames. We have now traded into it. Now, we didn't get all the way to here, which was our main target, which would be the end goal. But we did displace majority in that way. So when you displace past halfway, you can expect potential reversals. Of course, the goal is for it to fully fill the fair value gap, but it's not always going to happen. Okay. So that was the daily time frame. So what I then do is I then mark the remainder. So you would see that we've come into the fair value gap this much. So this now becomes the only area where price hasn't filled within this overall fair value gap. If I change the opacity to kind of make that point clear. So we've this strong line here. If I just make it yellow, that's a bad color. Make it purple. So from here to here, the maroon lines, we have the daily fair value gap. This purple line indicates where we haven't gone to. From the top of this to the bottom of this is where we haven't gone to. The opacity back to 100%. So we're now bullish, right? We're entering at after we filled most of the fair value gap, we've broken well, we haven't gone to that yet. We're at a fair value gap, we're in a discount. We're past the halfway point in this fair value gap, bullish fair value gap. We expect a reaction. So now what do? We have to set a target. Our target is all the way up here. Why? Because you can see on the daily time frame again, we've marked this area out as the fair value gap from here to here. Now, this is a low-hanging fruit, meaning that's going to be where we take most of our partials. It's still in a discount, so it's a very low-hanging, right? We would probably be targeting areas in this kind of format here, but there's not really anything clean. You can maybe argue that this is the order block from here, and then your overall target will be up here. But I would like to not hold my trades overnight as much as possible, and I would be targeting this low hanging fruit for the day. I would expect potentially price to come up to this level we marked, which is the order block. I know it can be sometimes confusing when there's so many lines, but I'm not in the mood to color coordinate right now. So you can see this is the order block that we have, right? And you can see price created equal lows here, swept it, use that same area as the retest to then drop. So that'll be the same level. I'll be expecting potentially some resistance, which is in the premium of that whole daily range from here to here. But low hanging fruit is right here. So we're gonna take some partials here. We'll have taken some partials here too, which is the top of the daily fair value gap from there. So we'll have taken some partials here. We'd take a large chunk, maybe about half here, and maybe let half run to this area, depending on if I want to hold overnight or not, which I generally speaking don't want to do because of the volatility. So to summarize, without the drawings now, failed high, bullish fair value gap here. We had this failed high, took out some swing lows, 1, 2, displaced in doing so, which confirms the market on the shift. We then pull back, fill most of this fair value gap on the daily time frame. I'm expecting our reaction, which is why we're bullish. Where we're bullish to, from here to here, you can see this is the leg, and that would be the midpoint. We have the order block right here, okay, and then we have low hanging fruit of this fair value gap, aiming for the low of it, which would be the kind of yesterday's high. So that's why we're bullish in the short term. It also lines up with the DXY philosophy of it filling up the imbalance and aiming for this kind of area here. Will it get here? Maybe not, which is why we take partials along the way, but we have low hanging fruit as our target. So that's why we're entering bias here. That is the direction bias, okay? The entry model is a whole different thing because you can sometimes have the direction bias, but because the entry model doesn't fulfill, you don't actually ever get into the price despite you having the targets. So what allowed us to enter this market? So we have midnight open from here. You can see the time frame. We're using the exchange, which is generally speaking, I think it's New York. It's about the same, but I use exchange, so you don't use your actual time zone, right? So no matter if you're in Europe, England, or anywhere in the world, you click exchange, you'll get the time that most institutions use and trade from. So the market opens 8:30. Generally speaking, you want to enter the markets from 9:30. These are just rough times. That's the kill zone. You would expect a Judas swing, which is a manipulation move from 8:30, right, to the opposite direction of where you're going. So I'd have expected price to come back down here to enter for potentially my live account, or if I wanted to re-enter, I'll be waiting for price to drop down. Those time frames are not always exact. Sometimes you can get the entry before, sometimes you can get the manipulation later. It's just a shape you're looking for. Okay, so from midnight, which is over here marked out by this orange candlestick, which for some reason isn't aligned properly. There we go. So that's midnight open. What do we notice? We swing up to this old high right here. We then swing down into this area here. And you can see that we sweep out these swing lows. And I think on the 15-minute, that's a fair value gap we draw back into from here to here. You can see from here to here, we draw back into this fair value gap and we sweep it. Okay, which this is the candlestick high of the order block. So we sweep the order block and the fair value gap a little bit. After that, we then displace. You can see by this box to be drawn. And in that displacement, we took out these highs. So that is a confirmed market shift from this kind of downwards momentum. We have a confirmed market shift now to the upside, which lines up with our bullish bias. So once we got that, what we are waiting for is for price to come back down to an area of entry. So you can see from this high to this low, we drew on this fair value gap. After it's finished doing these highs, we're expecting price to drop back in to the discount area, so where we can get for bias. So the whole move is in the discount area, and then our entry is also in the discount area, which is why we're kind of using the same model to paint bias. So with all of that being said, what I could have even done is from the first leg, which would have been up here, you can then push. To be fair, I wouldn't have entered this because it's not at equilibrium. So this is the only first entry I have. The second entry you could potentially have is from this current high, I would say from here to here. And I'll be looking for price to come back down to this box we've drawn, which is why we've sent an alert for a potential retracement. I was expecting price to come back down here from the market open, but this would be where I'd get a re-entry, right? I'll be expecting this kind of idea, but price seems to be quite bullish, and this is why we can sometimes enter this type of trade. So the main thing to be careful of now is going to be lunchtime, which is from 12 to 1. And then afternoon session, you can then trade from after that. But you'll expect liquidity targeted from 1:30. So I'll maybe even be looking to enter, I believe, from 2:30. So from this space here, we're expecting no trades and liquidity to be targeted. So maybe a drop to sweep and then continue or reverse for the afternoon session. But again, you need overall bias. So to help with, and there's a lot of lines, it's just it's quite clear to me though, so that's why I have it. This is the first target right here, which is a 1 to 2.36. You maybe take about 20%, just so that if you were ever to I don't know, if perhaps ever to reverse to stop loss, you mitigate some of the losses. So you're risking maybe 1%. At this 1 to 2, that's 2.36%. You can maybe take off that 0.36%. And then you're at a, so you take out about 12% of your trades. So if you are in one contract, you take off about 0.1 contract, and you're still in 0.9. And then you take out maybe half of it over here, which is the first strong low-hanging fruit, which is a 1 to 4. I'll take out at least 0.5 of the original. So I'll take out, let's say we're in 10 contracts, I would have taken out 0.1 contract, would take out 0.1 here. I'll take out 0.5 over here. And depending on the time and the context, it may even be 75% or the whole thing. I'll be happy with this though, especially at the start. Let's say I'm opening a funded account and it's my first trade. I would close most of it here so I can have a bigger buffer for new trades if I'm taking more than one. Then my ultimate target would be within the premium, this order block right here, which would be a 1 to 10, which would be like 25%. So that would be quite clean. So let's say it gets to here and we take off orders partials with one contract. With one contract, I'm actually in 20. So let me use 20 as an example since that's what I'm in. So here would be a 1 to 2. So 2 lots. Need the pips really. Would be £400. Or in this case, it's dollars. $400 if we take out some here. Wait, that's wrong, no? No, it's right, because we're risking 4K. So 10% of 4K is 400. So we'll take out 400 here. Over here is 43 contracts. And we're taking out at least half. So it'd be 10 contracts we take out, which would be 4.3K. And then the remaining, well, to be fair, this would be between 4.3 and another number, which would be, so if I take out half, I'll just take out the rest. So no, the rest would be 19 contracts. I'm just gonna get a calculator. What was the number? 43. This would be, if I was to take everything out, 170. I was to take out 43. I was to take out half, which would be 1. Just 4,300. And then let's take out 75% of the original, or 80, let's just say 80%. That would be 8. No. 6. 6.8K. Okay. And then if I was to have everything, or so if I was to take out here, this would be half. Then the remaining 40%, here would be 8 contracts, 1092. That'd be 7.36. Okay. And in this case, 80. 10% here, 80. Look, is there even a point taking that little out? 400 is not going to do anything. I'm risking 4K. 400 isn't much. Okay, let's just keep it for now. So here we use 80%, so we 16 plus the 1, so 1.7, so we'll have 0.3 remaining. 92. So we just had 3, right? Actually, no, times 3, be 2.8. And then if we add everything out, 91 would just be 40K. Oh my. Let me double check that. So it's 91 pips. Those are 20 contracts. Okay. 18K. That was to hold it all and so 100K. Technically, but it doesn't make sense. Well, because I'm risking 2,000. So the 400 is actually not bad because it's 400 of 2,000. So that 400, wait, 40 pips, 20 contracts, 10% is 2, 20 times 20 is 400. Yeah, okay, cool. That's not bad. It just like a nice little buffer. And you still might not even hit stop loss if you manage the trade correctly, because it shouldn't really break below certain values. Okay, cool. So sorry, I was just calculating if I was how I would manage this trade. So this line here is if I take out 10%, 70, 50%, so 10%, 50%, and then 50%, or 10% of the original amount, 50% of the original amount, 40% of the original amount, which will total to 12,060 dollars. So you're basically sacrificing 6,000 just in case it doesn't get here. 6,000 you're paying, or 6,000 you're risking from the whole 18,000, just in case it doesn't reach here. In this case, that's how much you're making. In this case, it's 10%, 75%, or 80%, and then 20%, which I want to compare for the first one. So it'll be 2,880. That'll be 10,160. So 10,160 versus 2,060. You're sacrificing just under 2,000. If I believe it's gonna get hit, I would probably take out more here, which would be this amount. And so you'll be making, if it only gets to this level and reverses to stop loss, here we're making 7,002. Here you're making 4,007. Right. But if you believe it's gonna potentially go here, you'll probably keep more in and you would make extra 5K. But then take away the 2 from here, ends up being 2K difference. Okay, cool. Anyway, that's just some calculations there, how I'd probably manage the trade. I'll most likely, I haven't even taken this out, by the way, but I'll probably take out, depending on the time of day, most here. I'll probably go with this. Let's take out everything here. It would be just 8,000. So then you have to ask, is it really worth 2,000? Because this makes 10,160. Is it really worth $2,000 to hold up to a very wishful place if price doesn't look like it's going to go there? So yeah, that's the decision we have to make at that time. Okay, let me have a look if there's news. Cool. So with that being said, we are going to, you already know it, ICT mentorship. I think we have 2 episodes left. We didn't watch that one episode of stream, literally yesterday, day before yesterday. Genuinely didn't do much. Well, that's a lie. Didn't have much time to do much. So, yeah. Also, in case you haven't noticed, we changed our profile picture. Took some semi-professional pictures. I say semi-professional because I literally did it with my sister in like 5 minutes. I came back home from church, stood in front of my bedroom wall, took some pictures, and then slightly edited them, and then I have a new profile picture. Just me smiling at the camera. Also put it on my Instagram as well, so it's now my official kind of image.
All right, folks. How you doing? Hope everybody's doing well. And this is just
so we last time I believe is on 39. We're about 48 minutes in or 43 minutes in.
Well, being a part of that move.
Cool. So the goal, remember, is just to watch the remaining 3 episodes. And then instead of taking notes, we're going to go through the mentorship by topic and take notes by topic so that we are able to adapt and search a lot easier. Because currently slides, the issue I have right now is that the ICT mentorship on the slides document is sorted by episode. So if I want to find something to do with maybe trading or learn how to trade and bias, I'll just do Control F and I'll say bias. And I have to go through all these different slides and try to extract the information I'm looking for, which is not bad because it does get me to like read things I wouldn't normally read. But there are times where I just want to know what I'm looking for. So in those instances, I think it'd be better to create a new document. And I was going to take notes, but when I take notes, it really slows down the progress. So I'm trying to just listen and maybe learn it through looking at some of the past markets than I would taking notes and then doing the same thing again anyway.
Other times it will be exhilarating because you were on the right side. When those moments of intervention occur, that's a manual intervention. That means someone is literally going in and manipulating price to do a specific thing. What would that be like? FOMC, a rate announcement, something to that effect. And the market will reprice aggressively, quickly, to a price that's well outside the scope that would be reasonably expected for that short-term perspective. Big explosive price movement. The economic calendar is useful in that respect because you can go in and see where these events are likely to form. So I'm looking for days in my son's model where he can go in and engage price when there is a medium or high impact news event. Or if there is a lack of one, he can practice, but he shouldn't be engaging with his normal risk percentage. Okay, so the first element is time. So at 8:30.
See, that's another good thing. Manipulation. When talking about manipulation, he said that it's actually good to wait for events. So we just checked earlier now. There was news or not. Just quick to do this. We were just checking out if there was news. There's not until the next day. For USD, you have Wednesday. But during these times, it's very good to get in, or not literally on the time, but to look for manipulation when you're looking for it. And then outside that, you just practice. This is a demo account trade, but the philosophy behind it is obviously something I came up with. and it would have been a trade I took on my live account, except my live account right now is inactive because I withdrew funds, and I don't know why it's taking so long because I wanted to put back in on Monday. I think I went to withdraw on the Thursday last week, so it hasn't arrived yet. But I was gonna put funds in back into the account, but lo and behold,
in the morning, that's when the news embargo list. That's the first element of time that I taught you with this model. The second one is 9:30. Okay, that's right here. The first here. At midnight, New York local time, that opening price is here. Did the market rally above that opening price at 8:30? Yes. Are we bearish? I proved this morning I was expecting lower prices. I preferred lower prices. So that means we're above the opening price at midnight. So my Power 3 concept is you want to be shorting at or above the opening price at midnight in New York local time if you're trying to capture movement on a daily range on a down day. So that opening price, look what happens. We run up, take out short-term highs here. That's a short-term run on liquidity. Who's going to have stops at that 1 minute? Anybody would put a stop loss in on the lower time?
also another good point. We are near midnight price. If you look at the idea of a Power of 3, from the time you manipulate to the time you accumulate, it should be equal distance from the bottom of the manipulation to the projected distance, which would be this and this. So that gap, this kind of like put on top here, mirrored here, would be the area of where accumulation takes place. So where all the buy orders are taken or entered, sorry, are here. And so when you're entered within that accumulation range, it's a good entry because then price will distribute. When it closes, you would generally speaking be quite a good distance away from price and your entry so that you can actually make profit. And that is if you are correct about the bias, or at least the markets showcase the effects that you were looking for, or the bias you were looking for.
There's traders that are doing that all the time. The algorithm is not aware of how much volume rests above or below a high or low that's penetrated. It has no understanding of that. It doesn't need it. For folks that are perplexed by that statement, and I've said it several times in the past, you ever play a video game? How about Pac-Man? I'm a child of the 70s. I was born in 1972, August 8th, 7:11 p.m. See that? 7:11. Lucky 7:11. I came in the world with some luck, didn't I? So when you're looking at a game like Pac-Man, okay, what keeps Pac-Man inside the boundaries of those lines that make up the maze that it runs around and collects and eats those dots until he gets to a power dot or chased down and killed by ghosts?
The code.
The program language keeps him limited. The playboard or game maze has limitations. Those limitations are programmed as such. Every video game today, they have a map, okay? Fortnite, Call of Duty, Battlefield, all that genre of video game creation, all those maps or territories that the player gets to enjoy and explore, they have limitations, okay? The daily range has those limitations programmed into it as well until manual intervention is brought in and those initial boundaries are removed. Okay, so think of price like that. So if you know that we're likely to see that in terms of like an analogy, we're at 8:30, we're above the opening price at midnight. We ran a short-term high here. The algorithm doesn't care how many orders were above that. It doesn't care. It just has to take out short-term high. It does. So it's at a premium. It took out buy side. So what is it likely to do now because we're on bearish day and we're above the opening price and it's at 8:30? Reprice for what? Sell side. Where's sell side? This level down here. 4101. Or what? 4100 big figure. 4100 level. So there's liquidity resting below that. What kind of liquidity? If market's price is here and sell side is here, it's old lows. There's sell side below that. So market price is here. Relative equal lows in the past is this level here. Go back in the beginning of the video. Okay, you don't understand what that level is then. That liquidity is sell side. We're at a premium here. This will be a discount because market price is here or here. Anything below is what? Discount. So the algorithm goes from buy side liquidity at 8:30 on a bearish day above the opening price. Wait for the market to trade lower. It does. Short-term low. See that? Some low. Trades through it. Creates a fair value gap. Ride back up to it. Sell short with the expectation it's going to run to sell side liquidity. This is what I'm teaching my son to do at 8:30. That's all he's trying to capture there. In this move, he may not run all the way to the sell side. He's going to get his 5 points. Once he does, he's stopping. He gets out, and then he watches the move go to the sell side liquidity pool. Why am I telling him to get out 5 points? Number one, 5 points is very, very easy. I think that is the lowest threshold of points a setup should hopefully yield. If you're trying to do anything less than that, you're doing ultra short-term scalping, and the commission costs will kill you. It ain't worth doing. And I think 5 points is an easy threshold. You can do it once in the morning, you can do it once in the afternoon. Even on a really weird, choppy day, you could reasonably pull out 5 points if you have the experience. You don't have that experience yet. So let me put that in your mind right now, because I don't want you thinking, I'm going to go tomorrow and do what he said. I've only been trading for a week, so I think he's really convinced me I can pull this off. And it's going to be 10 points a day for me, 5 in the morning, 5 in the afternoon. This is going to be cakewalk. I'm not supposed to put him at 2 weeks notice now to the boss. Pound sand. No. No, don't do that. You're not ready. But if that's a goal for you, start working towards it. So over time, my expectation is that my son will have a better understanding of what he's doing in those 5 points. He'll have hopefully learned to take a portion off at 5 points and then hold for that liquidity pool to be hit. And because of doing that very thing, he's rewarding himself initially while he's learning. So it engages him. It shows that he can make more money doing this than.
So that's the idea of this, is to visualize what would happen if I was greedy, if I was very passive, or if I was measured passive. Obviously, the difference between these two is based on kind of my opinions on the markets. If I even think it can get to here, I may even take everything out here, which is not bad as a 1 to 2, you know. Here's a 1 to 4, I believe, and here's a 1 to 10. So this is just me showing myself that, okay, yeah, if I take everything out here, but it reverses, I make 4,000 versus being optimistic, and I make 2,000, 1,300 plus, well, about 1,290 from being moderate. So I make profit on being moderate. Even if I'm being reasonable, I can still make an extra 1.2. So I just wanted to see it out loud. If I was being greedy and it got there, I'm making 8.2, 18.2, but what's the likelihood? It's very low because there's a lot of sell side or buy side liquidity on our way. There's a lot of areas in between us and where price, our target is up here. So because of that distance and the resistance between us, between my goal and me, there's some resistance. And those types of resistances, we're going to have to go through them. That's the only way you can get there. So I need to determine if I believe price can get there, because it's not me. I'm not trying to fight my way through something. It's price. So I need to see price believes itself, and it'll show signs like this displacement. You know, that's a sign that I believe myself. I can get past this one level, which is why I didn't take much out here, but I'm probably going to take some here, right? And the point you just made there, I keep stopping them. The reason I'm doing this is because I'm not taking notes. I need to speak out loud so I can learn and also see it in the markets too. So he's saying that from the 8:30, his son is looking for a sweep of odds buy side in this case because we're bearish. So he said he's really been bearish from the daily time frame. So he wouldn't be looking for sweeps of sells. So from 8:30, he looks up, he sees that he sweeps old highs up here. He then gets that displacement downwards, taking out this swing low with this fair value gap, but price returns back up there. And he would have entered here, saying the stop loss just above the first contributor candle with extra pips. Obviously, his futures, I'm not sure if it operates the same, but Forex, you definitely need some space. Then you would see this, bam, get another displacement here. But you see, you probably take some off. We'll see if your stop loss is here. You can take some off around here. And then let the price ride to some sell side, which is the target. I'm not sure he got the sell side from. So 149.52.
Today. All right, so this brings me to, and that's basically what you end up seeing here in the price of 440. Gets traded through and back into that daily fair value gap, as I mentioned, would be like the target for today. That very thing, he's rewarding himself initially while he's learning, so it engages him. It shows that he can make more money doing this than his job. Okay, that does not mean that you can do more than your job. I'm saying this is my son. He has me as his father. I'm sitting with him. I'm coaching him. I'm telling him what he should be focusing on. I'm questioning why he isn't focusing on other things. So I'm actually like co-piloting him. You know, I'm giving him, you know, visual and audible clues as to what he should be using to navigate price. So don't think for a moment, folks, that he sat down, you know, and did like a couple days of talks with Daddy, and now he's out there making 400% gains from his equity level up to where it is now. That is not what took place. Okay, he has the benefit of me sitting with him, talking to him. Okay, much in the same vein that I did with you all this morning on Twitter, where I said, "This is what I'm looking at. These are the levels I'm looking for. If this breaks, I think we're going down to that level." I'm doing that on a minute by minute basis with Caleb. So he's literally driving a car with me, talking about every pothole, every potential hazard that's coming. I'm reading the mind of all the drivers around us and telling him what they're going to do before they do it. So it's a totally immersive experience for him. And admittedly, it's a little intimidating for him. It's too much at sometimes, and we have to repeat certain things, or he gets confused, or he's apprehensive, or reluctant to do something, or he second guesses something. So, you know, all those types of things that any human being would have, you know, with Dad's expectation to learn how to do this. And also, you're doing it for money. So I'm teaching him to respect what to do, and when it's wrong, he feels it. It's not a matter of, well, you know, I can reset a demo account. No, this is real money. So when he sees the money going up in his account, he feels that good feeling. If he has entered a trade and it's drawing down on him, he's feeling that. Now, I know what I'm looking at. I know what I'm expecting. He doesn't. So I'm allowing him to experience those things. But 5 points, I think, is a reasonable low threshold. Over time, he will, by default, learn to trade with more than 5 points. But I got to give him something that is easy, that low-hanging fruit approach. That's how I teach. Just like I taught on baby pips when I first came out. 25 pips a week. You should be aiming for that. And when you get it, stop. Does that mean when you're trading 10 years from now, that's all you're going to do? No. People that have been highly critical of me, they have to take the things I say out of context and make a strong argument about it. And they have no idea what I'm doing with the new student. I'm targeting an audience that is trying to do something that's going to give them encouragement, feel like they're progressing. And don't think for a moment that 5 points just once a day isn't good, because you could literally do very, very well. Think about it this way. If you just did 5 points in the E-mini S&P, one contract, and never engaged money management to the degree where you start parlaying it up and start doing 2 contracts, and then 2 contracts becomes 4 contracts eventually, and then eventually you're trading. If you just did one contract, okay, so pound down for a second, and just listen to me for a minute. If you just did one contract of the mini S&P, that means 1 point in your favor or against you is worth $50. Now, $50 times 5, that's $250 a day. If you did that consistently, once every single day, that's 25 handles or points a week. That's $1,250 a week. I'm quite certain, after polling my audience on Twitter, which isn't my entire audience, obviously, I have a lot of people. There's a lot of people that actually leave comments on my video on YouTube, that I can see that they're a subscriber, and I can also see the comments that are left by subscribers. Usually, I answer the questions that people present to me if they're a subscriber, because it's kind of a little perk. Because I have like a goal. I want 1 million subscribers. I ain't gonna lie to you. I want to have 1 million subscribers on this channel, and I'm surprised and really honored and humbled that so many of you subscribe to this channel. I mean, 260 some viewers. I thought by the end of the year I could have had 250,000, but now I'm almost on my way to 300,000 before I know it. This channel could be in a year or two hit my goal of 1 million subscribers. But the folks that follow me and they leave comments, if it's a comment that I want to address, I usually will respond to those that have that little mark next to their name. You can't really see it, but I can because it's the channel. I'm the owner of the channel, so I can see who's commenting with a follow. And if you follow me, I appreciate that. Thank you for that. But I don't want any of you to think that you're going to make 5 points every single day. For instance, I took a loss of 5 points yesterday. I could have easily went back in and made 4 times that later in the afternoon. But that's just me. You don't have that skill set and confidence yet that, okay, if you take a loss and you took 5 points as a drawdown, you're going to want to go back in and do it right away. Whereas I can, and I chose not to. Because I want you to feel like, okay, it's okay. And I even proved that I can call a move, even in the afternoon. I said, this is where it's going to go. I'm going to a specific level. I'm going to it. I said, we run out the lows and we break a trend line that retail thinks is, noteworthy. And they destroyed it. Go back and look at the comments on Twitter. I don't delete a single tweet. 0. So I'm laying breadcrumbs down for you, but I'm not going to spoon feed you. You're going to earn it here. And that makes some of you angry. It frustrates some of you. And no amount of frustrated replies to me or, pointed statements is going to make me change the way I do it. Because once you earn this skill set, you will not regret what you went through to get it. And you will treasure it. You'll appreciate it. It's not like reading a book that teaches you a magic trick and then you want to go around telling you about
I like that. There's a person I have as a friend of mine, and the person wants a link to something that I have access to, but they don't. And they want it because my link is better than theirs. It works better, faster, etc., etc. Now, when I was looking for a link, I asked this person for some help, like, oh, I need advice. Do you have a website I can use to achieve this thing or this goal? The person said, I'm gatekeeping it. I was like, all right, cool. What would it take? So through persistence, she eventually gave me an app actually that works very well. And I just gave away the person's gender. Anyway, she gave me the app, and they now needed a certain thing to put in the app to get it to work. And I asked for it. She didn't give it to me. So you gave me, it's like someone asking someone to give you milk. They give you a cow, but they don't even tell you how to milk a cow. So you're like, okay, what am I doing with this cow? It doesn't help me. So eventually I'm like, okay, you know what? Fine. At least you give me the cow. I'm going to research how to milk the cow. I'm going to research how to make the app work. I did. I found it myself. There's other people that had it in the world, despite it being so carefully gate kept. I got it working. It worked, but it wasn't that great. So you know what? Your links app stuck. I'm going to find one of my own. So I now went and did deep research, and it cost me a lot of money, time, effort to find something that worked to the degree I wanted it to work. Now, this person that I asked for the link from, that sent me the app, they now got fed up with theirs, and I started showing off. They're a friend of mine, don't worry, but I started showing off my new link, saying, look, I got a link that's working, do you want it? The person said yeah, or the person initially said no because they were happy with the link, and then they realized there was a very important situation where they needed the app to work, and I knew it, and I was like, and they said to me, oh, my thing keeps like cancelling, it doesn't work properly. I was like, yeah, man, you can come and get mine. The person that asked for my link, I said, there's a specific way you have to get it to work, and I'm not letting you have it for free. How much do you want? I don't want money. I want you to make something for me or do something for me. And my point is this. It's a longer story for a very simple point. Sorry. I just enjoyed this story. But the idea I was sending to the person is that, look, this thing cost me to get this. I paid money. I don't want your money. I spent time and research and effort into getting this link and getting it to work. You are going to have to do something cost-worthy or something that costs you because it costs me. So here's ICT saying that once you finally catch the model and you fully kind of consume it to become your own, you will not protect it from other people, but you will treasure it more, even to yourself, because you know what it costs to get it. And look, if you go back on my YouTube channel, you see all the live streams and the hours I put into studying and working, taking notes, actively putting it into practice, going over my notes, even when I'm re-entering the markets, creating a whole app to help me log my trades so I can even improve further. Like, I put in a lot of effort for this thing. I've created a whole website that anybody can use and to log their trades, to see where the issues are, screenshots. It's got everything I wanted to make me better so that you guys can enjoy it too. But besides even plugging the app right now, because that's not what I'm trying to do, it is simply that I'm trying to show that when you put in the work, not only would that help you get the results, but it would also it will also change your perspective on how you see the thing you got. It's like having a car. Like a car, your first car, generally speaking, when you're young, and you get it when you're 16, just about legal age to drive. It tends to be like a cheap car. Your parents will buy you a car that maybe is old or is used or is, just so you can get used to driving. It's your first time experiencing the road. You don't want something too costly, something you can manage and maintain properly. And you will probably cherish it because it's your first car. But it would never, I would argue it wouldn't be the same way you would cherish your dream car. The dream car is a car that you probably haven't had for a while because it's a dream. It's also going to be, generally speaking, expensive because generally people dream for more expensive items than they currently have. There's also going to be looking nice. It's going to be something that makes you feel good. And to get there, it's never, generally speaking, easy. You're going to have to work for it, your dream car. Maybe you saved up for a certain amount of years. You had to get a good job. You had to budget, you had to sacrifice maybe some months of not rent, food or entertainment. Maybe you used to go out to eat in a restaurant or something. You spend maybe £1,000 a week or a month. Now you change that habit. You go out once a month. You only spend £200, or you go out not at all and you save that £1,000 towards the car. My point is that you'll make a sacrifice to get this dream car, and how I was going to say how I thought it. How foolish would you be to mistreat that car now that you've got it? How foolish would it be to now lend your car out to a stranger you don't even know? Or how foolish would you be to just give your car to somebody that you don't know how well they can drive, or you won't show them how to use the car? You would treat the car with respect. You would treat it with respect. You wouldn't just allow anybody to use it. You would protect it. And so is the way that you would treat the mentorship. I will definitely be very, very open about where I got this from. If I get free information, I generally speaking, will not repackage it to sell it. Now, I say that generally because the internet's free. Again, you would have to have a network provider that offers you a service, but the idea of the internet is free. But we utilize the internet to make content. YouTube is free as long as you watch ads now, but I still would use YouTube, repackage it to push our content and accept a monetization or accept money. So that's why I say generally speaking. So although the mentorship is free, I would happily direct anybody to do it themselves, because I know to really get the gold from this, you're gonna have to study. You can't, even if you just listen to it from start to finish, you won't get anything. You have to study what you're listening to and then put what you're listening to in practice and study that. So there's a lot of studying that goes into mastering this. I would even call myself fully mastering this model yet. I say like maybe 70% there. The 30% is just kind of final touches, getting that consistency and the confidence, looking at it in multiple nuances. And you can always tailor the strategy to your play style or your trading style or your personality style, because if you trade just the morning sessions, that's fine. You've utilized the model to its full potential in the area of which you want it. But the model itself can also be applied to the afternoon session. It can be applied to different instruments, forex, indices, stocks, potentially crypto. You can also apply the model to the London session, maybe Asia session, but it's primarily New York and London. New York first, London second. So my point is that the model has multiple facets. So to fully master it, I haven't done that. I've got my own little thing which I've applied it to then create. It helps me, for example, read the bias of the day. It helps me to have the entry model down pretty well. But there's nuances, like what happens in prices, that I don't have, which is why I say 70%.
About how to do the manager trade versus getting good at doing the manager trade. There's a difference there. Okay. So what I teach my son to do is at 8:30, he looks for a setup like this. If it's a bear scenario, he's looking for liquidity below the marketplace. And he's looking for some type of framework where it gives a fair value gap. That is his pattern. That's what he settled in on. And we're gonna run to liquidity, and if it gives him 5 points, he's out. Even if the framework allows for 30 points, he's getting out at 5. Now, I already know some of you hotshots has been doing it for a while. Or like the crypto troll meme, you just run your mouth. Oh, this guy, he's telling his son it can move 30 points, but he's getting out at 5 points. Who does that? Someone that's never traded live money before. That's who's doing it. Okay. Someone that's already made 400% in 1 month. That's who's doing it. Okay. Someone that hasn't had a losing day in weeks. That's who's doing it. So sit down, take notes, or move along. In the afternoon,
sometimes you do have to. People will see this as pride. I don't, because you need to understand. He's also responding. Let me give you an example. When Jesus came to earth, he called himself God, right? And so much so that the people were thinking this guy's blasphemous. And you know what Jesus responded? He said, look at the things I've done. Look at my works. I only do what I see the Father do. He also said, the miracles, signs, and wonders, look at them. Do they not speak for themselves that what I'm saying is true? So Jesus spoke about who he was and he backed it up. Confidence is that you're describing you are or who you are, but you're describing what you've done, right? Pride is to do the same thing whilst having in your heart the intent of looking down on other people. Jesus was never looking down on anyone. Why? Because that's God in man form. He's come to your level, meet us at our level as humans to communicate with us for that purpose, right? To the degree that we can now say, I've met with God, right? Prior, you know, so that's not pride. Pride is two things: looking down on people, forgetting whose you are or where you came from, in the sense of we're all creations of God. If you are not a person that believes in him or you don't like him, then you're just aligning yourself with Satan, which is the father of sin and the creator of pride. You're then also prideful if you are trying to be something you were never meant to be, or trying to be something that God does not want you to be. You're basically saying my way is better than yours, even if it's like God wants you to be a king and you want to be a peasant, or you want to be a cleaner or something like this, where it's lesser than a king, right? Then what's going to happen? You are in a way prideful because you're saying, God, you're wrong. How can God be wrong when he knows everything? Another example is if God called you to be a singer, but you want to be an actor, a movie star, you want to be worldwide, global sensation. Not that the thing you're wanting is bad, but the way you want and the reason for why you want it is bad. God doesn't really ever want you to not be great, but sometimes people will overshoot or step into a destiny that's not theirs, their calling. And then you can even get to the point where even if God says that he wants you to go for a demotion, get a job that has a lower salary, you will confidently obey him because you know that he would never not want anything that's not for your benefit. But to get to that point, it takes work. It's like your parents and child. It's very easy because as a child, you don't have another option, right? But what's the relationship? The child fully trusts that the adult knows what they're doing, hence why they obey even when they don't feel like it at times. Obviously, the child or the parent may have to discipline them or tell them off strongly to get them to do something. But the idea is that if their parent says come or go ahead, the child would have built to a degree a level of rapport or confidence, relationship with the parent, so much so that they would obey, listen, trust that the parent knows what they're talking about. And that's kind of how we need to be with the father. And there's all times where children will throw a puff and a rage. You can tell a child not to do something as a baby and they'll say no to you. How can a child who doesn't know anything tell you no? But they still do it because that's humans. And we do the same thing with our Heavenly Father. So we need to sometimes take notes from the child's, but also learn from their mistakes and learn from anybody's mistakes. And that posture of, no, Lord, it shouldn't be something that we take upon. So I say all of this to say that when he said there's not pride, there's confidence, and it's correct confidence. He's not just going around listing his models to look down on people. No, he's saying it to say you're speaking on a topic you know nothing about.
Afternoon, there's a setup as well. We'll get into that in a moment. But the next area of opportunity is the 9:30 hour. Okay, so equities open at 9:30, and this is one I outlined. The market was down here. I mentioned on Twitter, I said, okay, they opened it up at 9:30, initially started sending it lower. And we'll talk about that in a couple minutes, what that was and what information can be gleaned from that. But I said that they're going to take price up into the fair value gap and also clear 41.05. It's all time and date stamped, folks. You can go back on Twitter, take a look at it. It's there. It's undeniable. It's not ambiguous. It's very specific. Look at the time on your chart. It's here. I'm saying at 41.05, that's where the buy side liquidity is, that's where the stops are, and it's a fair value gap there. It's going to reprice there. And then you're going to see the real move for the day. The market drops from there. I went short on a demo account, and as price went below this low, I tweeted first. Go back and look at the little recording, okay? I'm not in here because there's people already going around in other forums and other social media saying, I'm trying to pump and dump because they know I have a big audience. They think I'm going to go out there and say something, hopefully create some kind of movement in the marketplace, and then I'm going to get out before I say I'm getting out. No. I literally record myself saying, pay the trader, and then I go in and I take my partial as it goes below here. Go and watch the video. So I'm not doing any of those types of things, folks, okay? I'm going to be your best friend. I'm going to be the best friend you could ever have in these markets if you just simply relax and trust me. I'm here to help you. I'm not here to ask anything of you except for subscribe. That's like a trophy for me. If I get 1 million subscribers, I want to have that. I'll put the work in to earn it, but I'm not asking you to pay for anything. I'm not asking you to worship me and cheer my name and all that stuff. None of that. I just want you to have fun, hang out with me. That's it. Because I promise if you put the work into this stuff and hang out every single day, show up every single day, even if you don't understand it, if you feel like you got confused about what it is I'm doing, keep showing up every single day. That discipline will yield results. Each one of you are going to have a different timelines when you're going to get it. I don't have a deadline. I'm stopping when it gets to this date. I'm here now. Okay. I'm enjoying myself. I'm having fun. And hopefully you guys are having fun too. But this setup here eventually came back and ran back above the short-term high and ran here. So we went one more time where? Above the New York midnight opening price. So we're at premium and above the opening price at midnight, and it consolidates in here, and then it breaks down, and later on in the afternoon we'll see what it does. Now, if you watch the video, you can see that I actually entered in here, went short, I was aiming for this, I had an objective of taking 2 contracts off here. So it went below that, I tweeted take partials, or pay the trader first, then I went into my demo account and closed out the 2 that went below that low. So I was managing your expectations, I was showing you what to do with your demo account if you were doing anything and engaging, and then I did my version of it. So I was giving the instructions first, and then when the market started going up, I outlined this order block here. It started to repel away from it. I actually mentioned I wanted to see price stay below this level here. All I did was extend this and mentioned that the overtaken order block here was problematic. I had anticipated, if you watch on there, in that short-term video, I had pulled up the partial close of 3 more contracts, and my stop I hadn't moved, except for moving the break even a little bit better than break even after the partial here. And then once it went above this order block here, that's when I closed 3 more contracts before the stop loss would hit. Now I could have closed the entire order, but to me that would feel like panic. Okay, I don't mind the stop loss getting hit because that's teaching you that's what they're paid to do. You're paying a stop loss to do its job. I'm not worrying about price going higher than my stop loss. But if I have an ability to take something off before the stop is going to go there, and maybe it goes close to the stop loss and doesn't hit it, I've taken something off, which was that initial partial here, plus 3 more contracts, and I had remaining 3 contracts that got stopped out better than even. So I didn't scratch on any position. I didn't take, in my opinion, large enough position off down here in retrospect, but that's how it's going to be for you. Now, the question is going to be this. Why did I pick this candle? Why was I concerned about it when it went above it? And why did I close the 3 contracts when it went above that? How did I know it was reversing, basically, what you're asking? Now, if you look at this sell side liquidity pool we have outlined here, that was explained on Twitter. It's also been shown on this video.
That right there is a great question, and that it's important to understand the question before you hear the answer, because if you don't understand the question, you'll not realize the value of the answer that's following. It's a question I've had. So one of the things I've encountered this is when I would trade the pullback. So you can see between here and here, there's a fair value gap, and you have this order block here. So I'll be looking for price to come back up to this area. I would set my stop loss above the first candlestick contributing to the fair value gap. So in this case, it would be above this candlestick, which would be above here. So my stop loss would be around this red line, roughly. And I'll be entering here, stop loss just below the red line, so maybe like here. And I'll be targeting maybe some liquidity down here. Now, obviously, I can't see the outskirts or the out of the greater picture in this instance, but just there'll probably be some form of liquidity below. So when price is coming back up, I would be entering the sell, expecting price to continue as a compound, which is what some of the trades I was taking last week were compound trades. Now, it's tough because he does say when you have a target below, it's fine to do so, but in the instance where I'm wrong, which I have been on 3 occasions, I mean, I've taken a type of trade 3 occasions. I think once or twice I've been wrong about the compound trade. So let's just assume it's twice. I believe it's twice. So twice it's hit my stop loss on a compound trade. Why? And he's talking about how one of the ways you can know when the price is going to reverse, which is why this is an important answer, because he's talking about it from the perspective of he took out some of his trade or contracts that were in as like a partial. I'm talking about, okay, what about if I want to enter a compound? I can still utilize this information.
Video. So if you look at the liquidity up here, the old lows, we went below that. So sell side's been tapped here. Then it went lower and created relative equal lows here, creating what? Another level of sell side below that. It went below that. So we now have another low formed here. What's resting below that? Sell side. People are always trying to buy lows. They're trying to pick bottoms. So the sell side gets taken once more here. And then this low gets taken here. So notice what's occurring. We went below sell side here, 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 and here, without moving very much. Notice that? So after we've taken buy side liquidity here, it should have been off to the races and went lower. And this should have capped the price on the upside because it's an up close candle. Institutional order flow, my rules for teaching that to you is if we're bearish and order flow is bearish, this should have stopped price like it did here. It should have maybe touched it one more time here or just bumped above that short-term high and then went aggressively lower. It did not do that. That's why if you watch the video of me actually doing the trade, I actually pull up the order to take 3 off because I'm watching to see if this is going to fail because it didn't tear off.
So he's watching price to see how it moves. So if we take that into this kind of instance, to be fair, it's not really, we're not really acting like, I wouldn't call that a thingy. Session open is here too, so I am expecting this move to the downside. We could even get this pullback and push up. So essentially, if price gets here, we should be expecting to see a strong reaction. If price hovers around here and it kind of consolidates, we don't get that strong impact. Obviously, it's not an order block, but it's a bearish candlesticks here. We should expect to see that reaction. Now, that's better when you have more swings. Here, there is this bearish candle, which is kind of pushing price a little bit, but it's not an order block. This is actually an order block because you can see the imbalance that was formed afterwards. If we go back to the charts, you have this imbalance here. Technically, this could be an imbalance right here, or an order block. Technically. So it could reverse deeper. True, and we might be concerned. Let me just set the alert just below market open.
Off and take that low out because it was reaching back up in its order block and then started going into it. I knew I was going to get smoked on the stop. So it would be easier for me to just take partial 3 off, which I had pulled up on my chart ready to go, versus just clicking to close the entire trade, which in my opinion wouldn't be as instructional for you, because I want to show you how you can still many times take something off again and it might not hit your stop loss, and then it resumes going in your favor, and hopefully you can add those 3 contracts or whatever the portion would have been if you had taken the trade, put them back on and add it, as a pyramiding type thing. But because we took this up close candle out, that was problematic because we had multiple levels of sell side taken below the original sell side liquidity that was outlined at the beginning of the day on Twitter. So in short, what should have happened was we ran the buy side here. That should have been the high of the day, and then it broke lower. But because it took out this candle here, after taking multiple levels of sell side, what's the other one going to do? Seek buy side. Where's it now? Above this high here. So it's doing that run up here, and then back above midnight opening candle price at opening near close time at midnight.
It's almost like the model kind of played out in opposite direction. So we're moving down cleanly, but then here we take out the old high after taking out liquidity, which is a sign of price being bullish. So similar to this, where we took out sell side liquidity twice, we then displaced upwards, and then we had that market shift to the upside. But obviously, this is just targeting liquidity. So the same thing can be said for bullishness. If we just take out old highs over here, 1, 2, boom, sweep, displace, we enter sells to the downside. And then whenever we take out sell side, if we then get the opposite, so sell side here would be maybe here, maybe, yeah, I'll say here. Like the main ones are here because there's probably minor levels. Like over here, right? You have some sell side here, some sell side here on the smaller time frame thing. So if we take out this sell side, well, you'd expect price to go up afterwards. If we take out some buy side, like we take out old highs here, and price then displaces to the downside, it might be a sign of a reversal, which kind of signifies kind of moves here. The only difference is this didn't take us liquidity. It's created equal highs, but then I had the model take us down to here. So this is why we could enter this buy a little bit more cleanly, because this wasn't a sweep of anything. So it was just a casual manipulation. And then this is now where we go into our trades. Interesting.
Near close time at midnight. And in the afternoon, if my son has taken a trade in the morning and was profitable, he'll do another trade in the afternoon. And he's aiming for either 8:30 or 9:30 for his morning session move. If he gets his 5 points at 8:30, he won't trade at 9:30. If he misses something at 8:30, he'll try at 9:30. Either or, he's trying to do one time in the morning. Now he can take a loss at 8:30, and he can try to make it back with the 9:30 setup. If he misses the 9:30 setup or takes a loss in the morning, he can trade the afternoon. If he makes money in the morning, I tell him paper trade or demo trade the afternoon. Okay, but why? Why not push your edge? If you have an edge ICT, if your son's so good and he's doing what he's being taught to do, why should he be trading every session move? Because I'm not teaching him to be greedy. I'm teaching him discipline. Because if he can see that he can make more and chooses not to do it, there's a certain measure of confidence, assurity, contentment, knowing that you can go into these markets anytime and get it. And that fact, that understanding, that realization is a peace of mind that keeps me from going in and overtrading. It keeps me from going in and doing more than is necessary. And it never allows me to fear and keeps me from ever fearing that these things are going to stop working. Like, I understand that I get lots of new students and they see what I'm doing and they're afraid that all these people that are following me are somehow going to break the market because they're all doing the same thing. No, because you're going to find setups that are going to be different than I'm entering. And I can do a lot of other things that aren't even in charts. So I'm not worried about these things failing because I taught more people to do it. Because if you look at the folks on my Twitter feed that are just subscribing to me and they're looking at everything I say and they think that's a code word for take a buy or take a sell, and they're rushing in to take a trade. They need to be slowing down. There's always going to be people out there that just because they're being exposed to this content, they're not going to be disciplined enough, and they're going to be people that come to this YouTube channel.
I think that's one of the main reasons why you can confidently just blind, like you can literally have a secret sauce, right? So I might sneeze. Give me a second. Okay, it went away. You can literally have secret sauce to like success or whatever it is, but because the path, generally speaking, for legitimate ways to get wealthy or successful are going to be a path of dragging or not dragging, or a path of how do I word this? Of difficulty. People are gonna not want to follow it because this generation especially love the easy way. So when something's not easy, people will not do it, no matter how golden it may seem. To become an actor, you have to take many risks. You have to do a lot of going out into putting yourself in a position you don't normally would. You have to put yourself out there. I mean, you are an actor after all, right? But people want to be an actor without doing the acting, if that makes sense. They don't want to do the things that you need to do to become an actor or actress. Then they would. So they're not willing to do the things that it takes to become an actor or an actress, yet they still want to be an actor/actress. And it's the same for anything. Wealth, generally speaking, is going to be a lot of work. Now, work isn't necessarily showing up to a job, right? You can put a lot of effort into that and not get the rewards of wealth, but you can, because there are people that are on salaries that are 7 figures, 6 figures, 8 figures even, you know. But it takes the work to become a CEO where you can earn that type of salary easily. It's a lot of work to get there. You have to be in the company for a certain amount of time. You have to show results. You have to be good. You have to have certain characteristics. To upkeep, you have to look presentable. That's very important as a CEO, especially. So all these different things you have to do to become a CEO. How many people are willing to do it? That means you go to 9 to 5. Let's say that's your job hours. You stay. You're the first one there. You're the last one out. You're able to impress your local manager, who gives you a promotion. He then moves on. You then take his position because you're the most. You're the best fit. You know, maybe the company, whenever they want to look internally for promotion, your name is mentioned because you have impressed people above you, besides you, below you in terms of hierarchy rank. And so when you're willing to do those types of things, of course you're going to get the results. But how many people really are? I mean, there's only one CEO for one company. And don't forget, there's going to be multiple people fighting for it. But how many people are going to really put in the work? Well, only one, because only one of them can be hired. So that means that everybody else that didn't get picked didn't put the correct amount of work. They may be put in the work, but they didn't put enough work to overturn or put themselves ahead of the person that actually got it. Now, I do believe there are some times where no matter how much you put in, there's going to be someone that's just favored over you. Sometimes favor speaks louder than work, right? But I'm just saying that maybe that's not the company you should be in. But if you put in the correct amount of work, they will always pick you. No matter your skin color, no matter your height, no matter your race, as long as you're presentable, you look a certain way, you look good, like in terms of you present yourself, you dress well, groom to the best of your ability. If you're a woman, you put on makeup, you put in the hairstyle that suits you, you know, you dress well according to the job role, you turn up to work early, of course you're going to get results. And the results tend to show in the job title. Not always, but a lot of the time. Now, of course, there's been people working against you. Context is important for this specific job, you know, degrees, the things you did prior. But my point of what I'm saying is that you put in the work, you'll get the result. But because most people aren't willing to put in the work, you can have confidence in that. Whenever you're putting in the work, you trust that your work will yield results because of the fact that you're doing what nobody else would do. And how do you know you're doing what nobody else would do? You're doing the thing that sucks. You're doing the thing that doesn't feel good. You're doing the thing that is a lot of effort. You know, even the gym alone, I've seen many people go to the gym. I've seen more people leave it than I've seen join it. Even though that's statistically incorrect. But generally speaking, the amount of people in the gym versus not in the gym is clear to see. And what's the benefit of the gym? Healthier, greater stamina, greater physical attributes, greater physical, even attractiveness. You know, your days it helps your the whole day, mindset wise, clears your mind, time of reflection, increases. I mean, think about it. That's a scientific way to improve your lifespan. How many people actually do it? Not many. And then when people get to the age of 60, 50 and their knees are hurting or their body's lower back is paining them and then their counterpart is, you know, healthy, going on a run, they're confused. Well, yeah, it's because you're eating McDonald's all the time and you're not working out. What do you expect is going to happen? You know, God is God, but at the same time, you got to make God's job easy for him. Why are you putting all this strain on your body? So, yeah.
And they are watching these videos and they're studying the concepts and they're never going to make it work for themselves. Not because they don't work, but because they're doing things with them in an undisciplined manner. They're doing things willy-nilly. They're trying to recreate the wheel because they want to be able.
This is an industry where only 5% of people are winners. I determined that 5% as the characteristics incorrectly in my early stages of thinking. The first thing you need to do is find the 5%, which is probably the hardest thing to do. You know, if I tell you to go on the streets and find a billionaire or a millionaire, it's going to be difficult because there's few of them. Just by numbers alone, it's statistically difficult. But another thing is that they're never really going to be in the place you're looking because where you're looking is where you're at. And if because you're not part of the 5%, you don't know where they be. So you need to find out their footprints. They leave footprints. That's the key to these people, is that they have a mark. If you're tracking somebody down, you're going to follow their, first of all, the information you have, but you're also going to find the footprints. Maybe let's say you're tracking someone down like in the FBI. What they do is they track their spending, their cards, seeing where the money's going because you need money to live, right? So they'll be buying things. So you track where they're spending money and then the location of the thing they're spending the card will be potentially where they're at. Not always. Sometimes it's a delayed information, so they may be somewhere else, but it could be a sign. If they say in a book, you read a book about Elon Musk, this person, all these billionaires, millionaires, and they all say they play golf. What do you think is the next best thing to do? Probably get a golf membership. So you get a golf membership, but you don't see them. maybe they're a different type of golf. Then you realize that there's levels to this golf thing. So then you need to find out how to get into the echelons. Sometimes you may not have access to it, but once you have the information, you know what to work towards. So now, okay, they're in this golf course, and they're only in this golf course because to join it, you have to be a billionaire or you have to pay £1 million. You don't have £1 million, but you now have okay, let me try and get £1 million, because then by meeting these types of people, I can take my millionaire self into a billionaire self because I'm now interacting with these billionaires. So that's the kind of key I would kind of suggest. And I love trading because it forces you to pick up some good characteristics anyway, because of the fact that you have to be disciplined. A lot of people that trade go to the gym. There's a correlation. You know, successful traders, that is. Traders tend to be disciplined. They wake up early because the markets wake up early. You know, so there's disciplines the market will teach you, which is why I call it a mirror, because it helps you improve. You can see yourself in the markets, because when I'm looking at the markets, I know when I'm being greedy, because that's what happens when you journal your trades. You then realize this has nothing to do with strategy. What this trade that I entered in has nothing to do with my model. I was just being greedy.
Let's say they did something, they made something, they created it. It's their authorship, it's their concept, it's their thing, their model, their approach to what they learned from me. Because it's clout. They want clout. Clout is the thing everybody wants right now. Clicking the buttons, watch my videos, come to my channel, that type of thing, attention to me. And those types of people aren't going to be the successful ones. The ones that don't care about being looked at or cared to be followed, they're going to be probably the best out of the entire fold here. Because that's how it is in my private group. The ones that are the most quiet, they're the ones that are doing it the best. They're not trying to make an image of themselves. They only care about the results, and the results are significant enough for them not to look for outward, approval. But in the afternoon, what was...
Facts. Now, why am I doing this? Why am I streaming this? Well, there's a couple of things, a couple of reasons. One, it helps me keep my word. The best way to keep your word to yourself is to keep your word to somebody else, which is very interesting, right? Because how can you trust somebody else if you can't even trust yourself? Or how can you trust yourself with somebody else if you can't trust yourself? Sometimes you don't want to let somebody else down more than yourself. You need to really work on yourself, though, because you can't love anybody else unless you love yourself first. So you can't give love. But somebody else has experience. Having someone to keep you accountable to, iron sharpens iron, it's going to help you, right? They can give you words of encouragement. They can motivate you. They can give you instruction if they've been there before, depending on who you choose, right? But iron sharpens iron, not wood sharpens iron. So you need to find someone that's similar. That iron versus iron is similarities. They have similar properties, similar makeup, right? So that's why the Bible uses that. It doesn't say iron versus wood. So finding someone that's like-minded that you can keep accountable to will help you, right? How do you find iron versus iron? Well, iron, you test iron, you hit an iron next to iron, you know both of them iron because they clang, they feel the same, they weigh the same. The fruits of an iron versus this out of iron is going to be the same. It's like if I have a knife and a fork, I want to know if they're the same. What would I do? I'll grab the knife, I'll try cut a lemon. With the fork, I'll try cut a lemon. The fork doesn't cut it. So it's maybe similar because it poked it, created some incisions, but it didn't cut it like the knife did. Watch somebody. Do they do the similar things you do? How do they approach time? Are they always on time, or they're early, or they're always late? And you have to look at yourself first, because you can't be now looking for early people and you're the late one. Be the person you're looking for. If you want to find someone to help you that's going to the gym, is always on time, be that person first. Then you can find somebody to help you, because you'll find them in the same places you're at. And you don't need to look for them. You'll be where you are. They say birds of the same flock fly together. So if you find that all your friends are late, I don't know, maybe it's because you're all late together. Be early, and then you'll see the early ones because they will be there first. Think about it. If you're going to a lecture, right, you're going to a classroom, and you want to find people that are always early, what happens? How would you find early people? You find them by being early, because when you're early to a place, the ones that are already there are also early. So those are the types of people you're looking for. When you're late, you don't know who is who, because late people, early people, on-time people, they're all there at the same time. But when you want to know, okay, I'm looking for a person, let's say you're trying to find a business partner or a friend, and I want my friend to have this, that, and that trait. Well, become that friend you want to be. And when you become that person, they're easier to find because they're where you're at. If I want to find people that are healthy and I'm unhealthy, how am I going to find someone that's healthy, please? The only time I'm ever going to find them is when they're having a cheat day. So am I really going to bank on the one cheat day they may have in a week or a month versus the other 6 days when they're in the gym? What's the higher odds of me finding a person? I have a higher chance of me finding a person that is healthy in a healthy location. So what's the best thing to do? Become healthy. Start going to the gym. And then guess what? Everybody in the gym, generally speaking, is more likely to be healthier than people not in the gym. So you want to find early people, you become early. You want to find people that are wealthy, you become wealthy. Now that was a different topic. I wish I didn't bring it up. But yeah, anyway, let's get back into the video.
What's the time I taught you in this mentorship? When is the afternoon session for PM session trading?
I
in
actually
the future?
forgot. I think it's 2:30, but I don't know.
After lunch, but specifically what time? 1:30. So at 1:30,
1:30, that's it.
right here, we're leaving an area of buy stops that have been taken. It's breaking down. And the market returns back to a bearish breaker there, then it starts to go lower. We have displacement here. That could have been an entry there. Once more low taken here. And now we have relative equal lows. They are broken there. See that? This is what I'm training my son to see. This is a valid setup, but I'm looking for these types of things for him because look what this is. This low, this low.
Okay, so 1:30, we see that from that time, price should be hunting liquidity. We take out these equal highs over here, but we keep going towards a bearish breaker. Similar to the previous one where, I don't know if you can see that. Oh, I don't know what time I was at, but anyway, you can probably find out. Here, it took out these buy stops as well, these buy side liquidity, but it also took you to this fair value gap. So it took you to a PD array above
Once you earn
liquidity.
this skills,
So it used both, right? Liquidity and the area of interest to then be the turning point. So we'll know that, okay, once we've had that market shift, it's because we've taken on the high and reached a PD array.
so that you will not regret what you went through to get it, and you will. Okay, but why? Why not push your edge? If you have an edge ICT, if your son's so good, and if he gets his 5 points at 8:30, he won't trade at 9:30. If he misses something at 8:30,
Jesus name I pray, amen.
he'll try at 9:30. Either or, he's trying to do one time in the morning. Now he can take a loss at 8:30, and he can try to make it back with the 9:30 setup. If he misses the 9:30 setup or takes a loss in the morning, he can trade the afternoon. If he makes money in the morning, I tell him paper trade or demo trade the afternoon. Okay, but why? Why not push your edge? If you have an edge ICT, if your son's so good and he's doing what he's being taught to do, why should he be trading every session move? Because I'm not teaching him to be greedy. I'm teaching him discipline. Because if he can see that he can make more and chooses not to do it, there's a certain measure of confidence, assurity.
Someone said the greatest power is having it and using it responsibly. But it's something that Peter Parker said. With great responsibility comes great. With great power comes great responsibility. But the greatest power and strength is the ability to do something and not do it.
Contentment, knowing that you can go into these markets anytime and get it. And that fact, that understanding, that realization is a peace of mind that keeps me from going in and overtrading. It keeps me from going in and doing more than is necessary. And it never allows me to fear and keeps me from ever fearing that these things are going to stop working. Like, I understand that I get lots of new students and they see what I'm doing and they're
That's something that I had to deal with in a different manner. I thought, well, Snapchat, Instagram, Uber, all these different ideas are just already existing. And how can I now come up with a new idea to then create wealth from it? It's scary because I was like, what if all the billionaires already here? But then I'm just seeing new billionaires every year, and I'm also seeing how much money there is in the world. I'm also seeing how much money is even missing, like treasures and golds that's sunk and all this type of things. I'm thinking there's a lot of money in this world for a lot of people to be rich. And so that's what helps me, or helped that fear of like, of ideas are running out, or I may not, what if my idea gets taken, I come up with another one, or I do my idea better than the other idea. You know, all these types of things are just helping me to see that there's a lot of opportunity, and I should never get bogged down, even with a strategy, even within the industry you're in. Oh, what if this person gets a promotion? Okay, they get promoted in this area, get promoted in a different area. Once you realize there's enough to go around, you would remove that aspect of jealousy, you would remove the aspect of fear of missing out a lot. You know, there's still other ways to deal with those things, but it'll take a big chunk of those negative entities and feelings and whatever out once you realize the goodness of everything.
afraid that all these people that are following me are somehow going to break the market because they're all doing the same thing. No, because you're going to find setups that are going to be different than I'm entering. And I can do a lot of other things that aren't even in charts. So I'm not worried about these things failing because I taught more people to do it. Because if you look at the folks on my Twitter feed, they're just subscribing to me and they're looking at everything I say and they think that's a code word for take a buy or take a sell. And they're rushing in to take a trade. They need to be slowing down. There's always going to be people out there that just because they're being exposed to this content, they're not going to be disciplined enough. And they're going to be people that come to this YouTube channel and they are watching these videos and they're studying the concepts and they're never going to make it work for themselves. Not because they don't work, but because they're doing things with them in an undisciplined manner. They're doing things willy-nilly. They're trying to recreate the wheel because they want to be able to say they did something. They made something. They created it. It's their authorship. It's their concept. It's their thing, their model, their approach to what they learned from me. Because it's clout. They want clout. Clout is the thing everybody wants right now. Clicking the buttons, watch my videos, come to my channel, that type of thing. Attention to me. And those types of people aren't going to be the successful ones. The ones that don't care about being looked at or cared to be followed. They're going to be probably the best out of the entire fold here. Because that's how it is in my private group. The ones that are the most quiet, they're the ones that are doing it the best. They're not trying to make an image on themselves. They only care about the results, and the results are significant enough for them not to look for outward, approval. But in the afternoon, what was the time I taught you in this mentorship? When is the afternoon session for PM session trading in index futures? After lunch, but specifically what time? 1:30. So at 1:30, right here, we're leaving an area of buy stops that have been taken. It's breaking down. The market returns back to a bearish breaker there, then it starts to go lower. We have displacement here. That could have been an entry there. Once more low taken here. And now we have roughly equal lows. They are broken there. See that? This is what I'm training my son to see. This is a bad setup. But I'm looking for these types of things for him because look what this is. This low, and this low. What's resting below that? Sell side liquidity on a bearish day. So does it want to drive down into that? It does. Does it create an imbalance there? It does. Does it trade back up into it? Yes. That's it where he's going to be selling short. And he's looking for his 5 points. And then he's watching and studying. Does it go to that 47 level that I was talking about? Does it go down to that daily fair value gap that I was talking about before the market opened this morning? And those things will deposit pseudo experience that over time results into real experience. And then he can lean on those instances of experience where he's been here before. He's not intimidated if he's done it wrong. He's not fearful that the market's changing the way it does things because he's now suddenly profitable and has a series of losing trades or whatever. He's not losing his mind because he's taken a trade that he thought was lined with likelihood and probabilities in his favor, but then failed. He's not discouraged by that because he knows that these things repeat. So, best case scenario, there's 3 opportunities for him a day. He's looking for just one of them to yield 5 points. If he does, he makes more than half of his weekly salary on that one trade. He's trying to do that once in the morning, once in the afternoon. He's taking a live trade in one or the other. But once he gets one live trade, he's trying to condition himself to do demo, or he'll pick trade it, whatever. Just watch and observe. But he's not trying to do 3 trades a day. Initially, I forced him into doing that. I said, take a trade in the morning, take a trade at 8:30, take a trade at 9:30, take a trade at the afternoon, and then and also sometimes at 3 o'clock to 4 o'clock, that market on close macro that runs by the algorithm. There's a little setup that forms most days of the week in that last hour. And it looks similar to this. It might be a buy day, it might be a buy setup, not just a short setup, but I'm taking him into specific times of day. I'm taking him to the market at these times, okay? If you have not been paying attention to this video, I've literally laid in your lap the very moments that these setups are forming. It's up to you to go through your charts and find out if that is true. The lazy won't do it. They want to be told what to do. They don't want to go in and roll their sleeves up and find it. But once you see this, once you see it in your back test and you pull out with example after example after example of how the market sets up like this and it runs the liquidity above or below the marketplace, count how many times over the last month, 3 weeks, 2 weeks, 1 week, how many setups offered 5 points with something just like this at these key times of the day? And then do the math. If you could just do 1/2 of that, or just 1/4 of that with 1 mini, it's real easy to see how it's just a matter of time before that thing you call a job no longer is a hindrance to you, because it is a hindrance to you, where you have your faith chained to their boss's generosity. They're so generous that they make you work those 40 hours, sometimes more, to get that paycheck. The Uncle Sam gets the tax before you touch it. And you come out and find out that everything's much more expensive today. When you have this skill set, folks, I want you to understand what I'm about to say. I'm going to close this video. When you learn this skill set, it removes fear. It removes fear of missing out. It removes the fear and anxiety of failing, but it also removes the fear of inflation. Because this skill set will always outpace inflation. I don't care if gas is $20 a gallon. I'm going to drive my Corvettes. I have 8 similar Corvettes that I absolutely will not leave parked. I will drive them and I will enjoy them. I don't care. Gas can be whatever it wants to be. It's a write-off for me. Okay. I don't care how much food is going to cost. I hope I can continuously find it, but I'm not worried about what my utility bills are going to cost. I don't worry about what things are going to cost. That skill set that you're learning here, it aids in that. It helps in that. Notice I'm not promising you get rich. Notice I haven't said that because I don't want you coming to my channel thinking I'm promising you to get rich. But I am promising you a skill set that offers the opportunity to do limitless feats and wonders. And it's only limited by your imagination. How much work are you going to put into it? How much work have you put into it? Who are you allowing to influence you and discourage you, distract you? Are you seeing results? Am I proving this stuff works? Do you feel scammed? Or do you feel energized and thankful that you're part of a community like we have here that's thriving? It's energetic. They're happy. They're uplifted. They encourage one another. And everyone here knows that they're not being taken for a ride. There's no upsell coming. Doesn't that feel good? It frees you up to just concentrate on learning. There's no angle. There's no sales pitch coming. Isn't that awesome? Isn't that cool? It's like, the point is you're in a community that we're all trying to help one another. And all I'm trying to be is the captain of the team and just lead you in the right direction and hopefully avoid the pain and struggles that I went through. Real counts, real money, real buttons are being pushed. You are going to find that there is a lot of opportunity that you're going to let slip by and not be upset about it. It's going to be one of the most fun experience that you're going to have as a developing and developed student of price taxonomy is you'll see so many stuff you're like, I could do this trade, but I'm not going to. And then walk away from it after it comes to fruition thinking, I could have done that. And I had the discipline to say no because I'm not being influenced by fear or greed. And when you're at that level and you're consistent, you have graduated. You are an independent thinker. You have mastered fear and greed. You have operated with a level of discipline that is unknown to majority of traders on YouTube, Instagram, Facebook, wherever. That day's coming for you. But you gotta go through this stuff here to get to it. It's not hiding from you. I'm not making it hard for you. I've literally taught you everything except for money management, which we'll talk about next week. And then you have to completely understand what it is you're doing here. and you're just gonna do the same thing every day. Some days you'll get it right, some days you won't. When you get it wrong, you stop. You don't rush to get it back. And you're fine. The next day, sometimes here it is. What you took as a loss the previous day comes back sometimes with interest. And that's a good feeling when it happens. It's like, well, I don't need to worry about it. Losing trades is like getting a flat tire. It sucks. It costs you a little bit of money and time, delays you from what you're trying to get to accomplish. But it's just a speed bump. It costs you a little bit of time and money, but it didn't keep you from getting where you're going. It just created a detour, a delay. But the inevitable happens still nonetheless. You arrive at your destination. Your destination here is excellence, and you don't get there overnight. You get there gradually. One step in front of the other, a little bit here, a little bit there. Sometimes you take a step or two back, get your footing again, and resume going forward. And sometimes you have to take a detour once in a while. That's all part of it. That's the growth that every trader goes through. But when it gets hard for you, when you feel like you want to quit, that's a moment when you need to just take a break. Take a week off. Don't watch my videos. Don't be here. I'm not taking my videos down. Take a week away from it. Enjoy another hobby, and then come back to it fresh. You want this to be enjoyable. You do not want to make it, I have to do this. It must work. I got to get on my job right now, because it's just going to make it harder and longer for you to learn it. Have fun with it. Enjoy it. I have to ask a question here, and obviously by the number of comments in either support of it or there's no interest in it, whatever. But if you'd be so kind to let me know in the comment section if you would like to see me do a very short, I'm talking like 2-minute, 3-minute review each day where the setups were for the S&P and or NASDAQ. I'm not going to do both because it takes so much time to do that. But where were there setups for you to engage with what I'm teaching here in this mentorship? If you'd like to see that as a Monday through Friday short little upload, just let me know in the comment section below. Also, if you could include also what your experience has been so far under my teachings on this YouTube channel. Has it been a positive experience for you? Has it been not so much of an impact on you, or has it been just simply waffle? Maybe I'm missing the mark entirely. Be honest with me, but just be respectful. If it hasn't been your cup of tea, you can respectfully tell me that. That's okay. I'll just use your feedback to hopefully try to dig in a little bit deeper, and maybe I can find something that helps you, or maybe not. I don't know. But I'm looking for feedback, and that way you can help me in that regard in the comment section below. And until I talk to you next time, Lord willing, on Tuesday, enjoy your weekend and be safe. All right, folks, welcome back. This is going to be kind of like the direction we're going to be going in the future with the channel here. I'm wrapping up the mentorship teachings for this model, and we'll be just basically doing reviews and index futures, Forex, commodities when it's applicable. And I posted that on Twitter. That's kind of a short little promo. And everybody was excited thinking that I'm going to be doing like 30 different markets every single day. It's not what I'm doing. So kind of give you a flavor for what it is that we will be doing. The mentorship group that I have with us, a private group, I no longer make videos for them. And one of the reasons why I started this project here is to steer people away from wanting to buy videos that aren't going to help you anyway. So when you're buying old videos, I'm talking about market moves for that particular day. So it's not going to be as useful to you. So to keep people from profiting off of pirated videos, I stopped making videos in my private group, and I make them here publicly. Now, some of my students are upset that I did that. Others that understand why I'm doing it are in support of it. I'm not going to argue or wrestle with the opinions of who's in support of and who isn't in support of. I look at it this way: the folks that would have an issue with it, they're probably the ones that are trying to sell pirated videos. So now I've removed their market. So you're a fool if you're going out there and you're buying all these Instagram guys that are selling my videos. I got ICT mentorship 2021, 2022, 2020, 19, all the way back to 2016. Folks, they're not going to help you because you weren't there when it was given at the time it was given. That's being mentored. So that's what I'm kind of doing here, and I do on my Twitter account. So that way we understand why I'm doing it and what motivates me to do it. So there won't be a lot of markets obviously being covered each day. I'll be looking at the markets that I was referring to either on Twitter or I actually put trades in. So it's not a matter of talking about something that no one expected me to have an interest in, which is predominantly what you see here on YouTube and Instagram and Twitter and Facebook and Discord and it's the list goes on and on. So today, 1 minute before 8:30, I apologize. I was waiting for my phone to update its software, and by the time I got back on to Twitter, I had 1 minute left to type out everything that I posted, and you can go on my Twitter feed. You can see the post in here too. But on the economic calendar, there was a high impact news driver for Canadian dollar, and I said I would start working in Forex. So there's a lot of you are specifically interested in Forex because that's predominantly what I'm known for. I've moved away from Forex recently because I want to be a part of the stock index futures market, and I'm still engaged obviously in that. I did some live trades today, and I'll share some of that with you as well. But I was covering the Canadian dollar, and what I was outlining is kind of like this idea, and we're going to use it also to work within the scope of the teaching on daily buys, and we'll get into that in a later time in this video. But when you look on the left-hand side, this chart here is the dollar CAD daily chart, and on the right-hand side is the hourly chart, the same pair, dollar CAD. Notice what we saw last week. The market traded up, just bumped the short-term high here with that daily high. What do we see once that occurred? What formed on that daily chart? You want to pause the video here.
One second. I was eating. Right. What? Well, we are yet to form a daily. I don't know if this is closed. If this is closed, then it's a fair value gap here, which when we created kind of equal highs. I don't know. Is that equal high or no? Just me. Okay, basically equal highs. Also, if it comes below this equilibrium, or this low right here, I'm gonna close the rest of my account. Account trades. Reason being, these bearish candles, sorry, are meant to be order blocks, which is what we've analyzed here. So price has yet to really like push away from it, and we created a fair value gap here, and then we created a bearish fair value gap here, and price has yet to come below this low. So I don't want price to take this out, because if it takes it out, this could be a potential reversal. We also haven't had a fake manipulation to the downside from the 830, which in terms of time, we won't really hold our trade beyond this blue line, which is the 12 o'clock mark, which is like lunchtime again. So we have kind of the time from here to here, and then decide, and if I want to enter, close the rest of the trades if it gets below this equilibrium. Now, it's possible it comes down here and it comes back up. It just matters when. It should do it now, kind of come back down here now and then go up, which is the idea. And now lunchtime, I would expect price to go deeper to get our main entry for the potential buys in the afternoon session, which is now established 130. So I'll be looking for entries down here or here at 130, which is why I want this to come down now quicker to potentially go up now, or for it to just, if it hovers, I'll probably take out by 12. Goes up to here. Ideally, I want it to come up here by 12. That's the almost ideal. I'll take my profits. But let's see.
All right, you need more time. Pause the video, 'cause I'm about to continue.
Equal touch. This.
When the market ran into that old high here, it hit it, and the next day it created a lower high candle. So we have one candle, a higher candle high here on candle 2 and candle 3 or day 3. So this is why I dub a swing high. I'm not using a Williams fractal on MT4. I don't use MT4. This is not MT4 platform. And 5 candles, if you're waiting for 5 candles, you missed the boat. So this swing high at an old high, did it run it? Not by much, but it did. That movement right here shown clearly in an hourly chart. And the following day, creating a high that has a lower high than the highest one that ran into that old high. So we have a 3-bar pattern. One candle, the lower candle to the left, the lower candle to the right. That's a swing high. Pretty simple stuff. Then the next day, I'm going to be expecting the market to trade lower. Now here's the problem with this particular market. Yes, it's likely to trade down with the benefit of hindsight I'm showing you here, but again, I tweeted about this beforehand. So at 8:29 a.m. Eastern Standard Time, you can see that is on my Twitter feed. If it's dropping down, we have this down close candle here. So it could be met with some resistance digging into this range of this down close candle. About half of its body right in here. And not surprisingly, you can see that's pretty much where we closed that candle here on the 21st of June, 2022. So when we look at this dashed line here, what I'm anchoring to is the opening on this down close candle, because that is a bullish order block. Now, I'm not suggesting that we went into that to go higher. I'm just saying that as we started this down move, it's digging into this candle. So that's going to be the impediment to a big sudden one big candle that would take us down into this area here and clear out this. So over to the hourly chart, you can see last week we ran up into it, started drifting lower. Fair value gap here, it rebounds to that, drops back down, consolidates between this high and the low here, comes back in, drops once more, attacking sell stops here, consolidates once more, breaks, digs into that order block. Again, that's this level here. So watch what happens. It goes into it overnight, then it rallies. This rally here is ahead of the 830 news driver on the account. You can find them on forexfactory.com. But this movement here, this is all manipulation. That takes us up into an imbalance here, fair value gap, running a short-term high, buy side has been taken, runs here, that's anchored above the short-term high. The chart on the left here is a 15-minute time frame for a dollar CAD, and the chart on the right is a 5-minute chart. On the economic count, you can see at 8:30 in the morning, June 21st, 2022, we had high impact news driver for core retail sales and medium impact retail sales number. Yellow events, I'm not interested in. Red or medium impact, high or medium impact. Those are the news drivers I'm looking for. So if we look at the price movement on the 5-minute chart, you can see once we ran up initially at 7 o'clock in the morning, what is 7 o'clock in the morning, New York time? That's the beginning of my ICT New York kill zone. It's extended to 10 o'clock in the morning when it's 4x. So 7 o'clock to 10 in the morning, New York local time. The market creates a short-term high, then runs above that. So we have buy side taken, then the market drops just below here, but I want to have a more meaningful displacement. Okay, we want to see something that's more energetic. This little toe in the water type thing here, that's not enough. We want to see it fall in. Okay, so it drops down, that short-term low here, that's your shift in market structure, energetic displacement, and that candle is exactly when that news driver came out at 8:30. So all of this is news driver related, economic calendar, manipulation, and market is going to cause people to want to sell short and chase it going lower. It creates a fair value gap in here on the 5-minute chart, but there also is a fair value gap here. Now ahead of the news, you might be thinking, well, couldn't you have sold short here? Yes, you could have, but the economic drivers that come out at 8:30 could have sent it up higher and taken us into this area here. So really it's a matter of waiting for the news to hit the market and then create the setup. That's a little bit more conservative. There are times when it's so obvious that they're going to continue the move that starts ahead of the new driver. But it takes a little bit more experience to find those setups and trust them. I would rather you use your demo account to see these types of moves real time, wait for them to form, and then go in and engage them with your demo. Not try to forecast how much of a move it's going to further increase higher or lower once the new driver comes out or the news event hits the marketplace. Relative equal lows down here, there's your sell side. So we had this fair value gap formed after buy side was taken here, but now this creates an area of buy side. That once this trades lower, we have this fair value gap and we have this fair value gap. So it could run up into that level with the volatility. So you have to make sure that you have that defined with your risk management. The draw on liquidity is likely to pull down into here or into this fair value gap, and we'll talk a little more about why that's the case. But eventually it trades down into it, bagged and tagged, sell side liquidity. The tweet I posted, again, you can see this at 8:29 a.m., June 21st, 2022. I just made it on Twitter, but basically saying, good morning, folks. Dollar CAD is about to have some volatility. Note the sell side and buy side on your 5 and 15-minute charts. Sell side is here, buy side would be here. Study if it wants to run sell side before buy side or rebounds to a discount. What does that mean? the news driver release, it could go up and bump the buy side, then dig in for the imbalance here. That's a discount, or run the sell side out here.
Upset. It was a good word, man. Okay, so we're trading down. So failed high. I might just hold this because we didn't sweep liquidity. So this move is just a part of the process. If this sort of liquidity did this, maybe I'd be concerned because this red or these downward candles should be an order block. Plus, to fair trade them. Wait, he did have an example from yesterday. So last session where just making clean lower lows and it taking the close above the order block was the problem. And like going below here is the problem. I'm gonna close. Okay, the server's being slow, but I've entered put in the order to sell it.
So all this movement up since 5 o'clock in the morning, New York local time, this was just ahead of that news driver here. So they were building in a premium. Then during the New York kill zone, it continued to set up that teaching this model, delivered to the fair value gap, and delivered to the sell side liquidity pool. Between this high and that low, here's equilibrium. So we have to find a discount array below that if we're going short. That's the fair value gap here. You take a partial there and target the sell side liquidity, which you can see it does that as well. Here and here. I tweeted, and I failed to actually include that tweet. I wish I would put it in here now, but I mentioned how the market reacted here like that, and I stated that's the reason why you want to take partials, because you don't know if it's going to come all the way back up and then revisit this fair value gap and lose the opportunity to bank something when it goes into your first opportunity discount array when going short. Now I'll drop down to a 4-minute chart, and I dimmed the fair value gap that I mentioned earlier, that you could have taken that trade but be ahead of the news driver, and it's a little bit more riskier. But you wait for the displacement, short-term low is taken, then we have a shift in market structure, and the imbalance would be between this low, this candle, and the high of this candle in here. Now by itself, this is a rather elongated imbalance. So all of this sell side delivery is imbalanced, and there's not enough buy side delivery, so it's going to want to wait for the market to come back up in here. In Forex, there is no central measure of volume, okay? And in the algorithm that delivers price, that is going to want to come back up and overlap this down move and offer buyers an opportunity to get in on that. This is too much of a movement one-sided, so the market offers that rebalancing. So if that's the case, where in this range would we be looking for an entry? Knowing that this fair value gap could be revisited, and you're going to utilize that for your stop loss. So your stop would have to be here. Doesn't matter where you're going short in between this low and this high, you have to define the risk with the stop here. based on the model I'm teaching you. Now, some of you are like, oh, this is too much, because if I went in at 129.45 and I put my stop here, that's almost 12 pips. That's too much. No, it's not. It's all relative. You can scale. That's one of the benefits of Forex. It's very scalable. Whereas if you're trading futures, you're kind of stuck to whatever the contract size is, and you got to either make it work or you can't take trade, or you're basically over leveraged, which is what you don't want to be doing. So if we look at that range from that high down to that low and drop a fib on it, we're going to measure 50% here. That's our equilibrium price point. So really, we need price to get to that point or higher. So by definition, we could be looking for a short here up to here. And that would look like that. So that's really the range that you want to sell short in. So you're not really risking a lot of pips, but you're defining the entry a little bit better. Even though it goes above it a little bit, that's okay. But the bottom line is it eventually gets in sync. Watch the bodies of the candle support that premium high of the imbalance. Beautiful delivery. Then it starts to break lower. One more time, falls to the rally. Takes buy side liquidity once more. Then the real move starts to unfold. Trades into the fair value gap here. Take partials. So that way, if this reverses on you, you're paid. And it drops below a low, where engineered sell side liquidity would be, and then digs into sell side liquidity over here. So your entry could be 129.44, 129.47 in that range. Anywhere near is reasonable. It's acceptable. Obviously, the closer you get to this level, you may not have been filled. It might just leave some of that open and then start to roll over. But as you can see, it goes a little bit further. That's fine. That's all. You utilize this level here for a stop loss based on the model's rules that I've taught in the 2022 YouTube mentorship. All right, so I have a 4-minute chart here with all the details shown. Sell side liquidity pool, relative equal lows from the morning. It rallies up, creates a high after buying buy side liquidity. It breaks down, consolidates, and gives a short-term swing low here with an energetic run lower at the high impact news event at 8:30. Rebalance, stop goes here, and it rolls over during the 10 o'clock to 11 o'clock. That time frame, 10 to 11, that's London close. So if you're looking for directional plays and you're in a trade, you want to have about 80% of your trade off between 10 o'clock and 11 o'clock in the morning. Because usually, not all the time, but usually that's when it creates the opposing end of the daily range. So if it's creating the high of the session here, the low is likely to form between 10 o'clock and 11 o'clock.
So we mentioned or alluded to this earlier with these kind of things. And also the markets. So he's saying 80% of your trade off between 10 and 11. So I was saying that I'll probably I wanted the price, I expect price to come down here, and that'll be our re-entry. But I was also saying how I want price to go up here, but it's possible it goes down here. There's this order block that it's not really reacting to. Also failed to create the high, which could be also two ways looking at this. One, we didn't take the high, which showcases that we are not strong, but that market starts to shift in terms of the fair value gap from here to here, and then the taking of the low is the concern, because then you pull back into this fair value, can come back down. Because you have failed high, market for the shift, taking of the low, fair value gap is supporting both the markets for the shift and the taking of the low, which is the same thing almost, and then of course the pullback would be the concern. All right, this is an order block as well, and we did not respect it enough. We didn't get the strong reaction that we're looking for, but at the same time, you didn't take buy side liquidity to then form this, so this move could just be a part of this pullback. But you will notice 10 o'clock is here, and that is kind of the time frame anyway. We want to be taken off 80%, which is where we're at. This is a trade we got in at 7, which is where New York or London kill zone starts. You can see we got the move or the entry model at 7 o'clock and held it to 10 in New York. So that's 3 hours anyway. Took off pretty much most of my trade. And although we didn't get sell side liquidity, we are in that hour of taking our profits, and we gave our reason as to why. Failed high, fair value gap, taking out this low, and this order block not being respected, not giving us enough push, is the reason why we took out the trade. So we made on that trade 3 point. Wait. Made 3K. I took partials, that's why I was kind of calculating, but I realized it just did it for me. So we made 3.04. So our account's at 102.82. We've made 5.4K profit, but commissions is 2.5K. That's crazy. Brokers are making a killing. Wow.
That's algorithmic. Now, sometimes there's news events, sometimes Canadian dollars influenced by crude oil numbers, and that would sometimes skew this time window, 10 to 11. So on those days when there's crude oil inventory numbers coming out, and I'm interested in trading the loonie, I will trade with expectations between 10 o'clock to noon and not have such a tight little window of 10 to 11. And I promise you, I have students for days and days and days and years now that will confirm that this has not just been form-fitted for this example. I've always taught that 10 o'clock to 11 o'clock in the morning is unclosed profit taking hour. I'm quite sure if you go through the older teachings I have in this YouTube channel, you'll probably actually hear me talk about that very thing as well. All right, so we're going to talk about the E-mini S&P futures contract. This is the September contract for 2022. If you're following along on TradingView, and I hope you are, the symbol you'll be utilizing for calling up the data for this contract is ESU2022. Okay, and that will give you.
Can't follow along because my backtesting of features doesn't allow me to go that far back.
This chart here, this is the daily chart. And before I get into it, I want to talk a little bit about daily bias. Okay, so this topic is one of the most requested topics that I would cover.
Yes, that's the one I struggle the most. I've gotten a lot better, but I still can do with some information.
And I have done many teachings on it. I've done amplifications, I've done revisits to this idea, and I know what you're wanting, okay, because this is what I wanted as well. You want a simple ABC 1, 2, 3. It always works. It's always going to be the same way. It's always going to be the same procedure, process, and it's always going to give you a winning trade. Now, some of you are already folding your hands and hissing. You're like, oh, that's not what I want. That's not what I want. You're exaggerating, Michael. No, that's really what you want. You want me to give you a very
That's what I
simple,
want.
clear approach
Facts.
to find daily bias. And I want you to understand that I taught these things many times
But
throughout.
what I realized, I don't think you can, because even just looking at the conditions, it's weird. It's like it's not always going to have the same way, you know?
Lessons and lectures and series that's found on his YouTube channel. This is the simplification that I make for daily bias. If you stick to these rules, you will know how.
Everyday bias is unrealistic. I don't know what that means. As in having one every day, or to get it right every day, or what? Determine the likely weekly expansion. Okay. Look for obvious liquidity in that direction. Identify imbalances in price delivery top down. Focus on the high or medium calendar event dates. Look for directional price runs in my kill zone intraday.
I find daily bias as I teach it. My students follow these rules. Okay, I'm gonna go through them with you, and you're gonna be kicking and screaming and saying, "No, there's something else you're holding back." There isn't. It's experience. It's doing it yourself. But the keys to daily bias are simply this: everyday bias is unrealistic. If I go in looking for a specific predetermined daily bias before the market starts trading, invariably I'm gonna have it incorrect. Notice I said that I'm not perfect. Some of you hold me up to this hero level status, and I'm not a hero. Okay, I'm just somebody that knows what they're looking for and knows how to avoid, hopefully, making the same mistakes over and over again, because I'm looking for a procedure and process that will lead to an outcome that generally, not all the time, but generally yields a specific result. So I'm not trying to get daily bias every single day. I'm trying to determine the likely weekly expansion. Again, what is that? I utilize a weekly chart and I study that. And I want to see, does it look like it's going to run to an old low? Does it look like it's going to run to an old high? Or is it running to an imbalance below the market price? Or is it trying to run to an imbalance above the market price? Or is it likely not to move because there's no data for it for that week? And other markets have high impact or medium impact news that would be more interesting. And the algorithm will be working those pairs or markets. And the pairs or markets that don't have a high impact or medium impact driver will probably be a lackluster market environment. I'm looking for the direction of an expansion move. I'm not trying to get the entire weekly range. I'm not trying to buy the weekly low and sell the weekly high. I can, but that's not what I'm trying to do. You don't need to do that, okay? I know some of you hate when I do that, but I'm trying to make sure you understand there's a distinction between what you should be coming into this with in terms of expectations and what is realistic. Okay, in the beginning, all you're trying to do is determine, is it likely to expand higher? Is there going to be a big move, a flurry of activity going higher during the week or going lower during the week? And by itself, that is huge in terms of what you're trying to pick. Now, you might be wrong, because sometimes I get it wrong, but I'm looking for some volatility in a direction based on what I'm studying on a weekly chart. So this is a daily chart shown on this slide here. The same thing I would be doing to determine where the daily chart's going, I'm trying to do that with a weekly chart. But I'm only interested in seeing what's it likely to reach for. I'm not trying to predict the weekly closing price on that candlestick. I'm trying to look for where is the bulk of that volatility going to be pushing, higher or lower, and why would it be like that? And it's as simple as what I mentioned earlier. Is it aiming for and gravitating towards an old high to run above it? Or is it gravitating towards an old low to run below it? Or is there an imbalance where it needs to come back and revisit that? Because it might just drop down to a fair value gap to go higher longer term. I don't even need to know that. All I need to know is what direction is most likely to have the majority of the volume pushing through. Now, when I say volume, there is no centralized volume number in Forex. When I say the volume, that means the interest, the chaos, the energy, all the activity, the action, okay, is it going to be on the higher side, reaching for buy side, or is it going to be on the lower side, reaching for sell side? That's what I'm looking for. I want to find where is it likely done for this particular week. Who's in the crosshairs? Have people been making money going long? Is there a low that they're going to try to run down and stop them out with it? That would be enough for me to frame an expansion going lower. So I'm looking for obvious liquidity in that direction, below lows, above highs, or identifying imbalances in price delivery top down. That means from the weekly down to the daily, down to the 4 hour, down to the 1 hour, to the 15-minute chart, and then once you get to the 5-minute chart, you do the ceilings from 5, 4, 3, 2, and 1, whichever has the clear, obvious fair value gap for you based on the model's rules. And I focus on days that have high or medium impact calendar events only. So if you go through your economic calendar, in fact, you can look at next month's economic calendar. They're already there. Where are the high impact or medium impact news events for the markets that you trade? What day of the week and what time? So if you have a news driver that's coming out on a particular day, say Tuesday or Wednesday, and you're expecting the weekly range to expand lower, well, on those medium impact or high impact news events, I'm going to see hopefully something that is going to run up higher, go into a fair value gap, or run above a short-term high, run stop, then break down, show displacement, then create a fair value gap, and I'm going short on that. And I'm doing that and looking for that setup and that directional price run inside my kill zones intraday. At the same time, the economic calendar is suggesting a high impact or medium impact news event is likely. So what did I just teach you here? I basically said that there is absolutely no expectation on my part to know the bias every single day of every single calendar trading day. I'm only focusing on these sweet spots, these low-hanging fruit days where everything's coming, all the stars are lining. Okay, I'm looking for the higher time frame weekly to expand in a specific direction. That starts my bias. Then, if I think it's going to go higher or going lower for a specific target or imbalance, then I'm going to go to the economic calendar to look for when that might occur. Now, there may be a move that happens prior to the economic calendar event occurring, and that's just going to be a missed opportunity. So you have to use something else, some other pair, something else that you got to trade with. Sometimes that occurs. But you'll see that there's a lot of opportunities using this criteria. And it's very forgiving for you as a developing student because it's already given you permission not to know the daily bias outside of these rules. So you want to trade every single day because you want to be the everyday trader. I don't want to be the everyday trader. The everyday trader is more prone to have losing trades because they are trying to do something every single day when there are times when you should not be trading at all. And that's what makes me different from all the other educators out there, because I have made a career out of knowing how not to destroy myself because that's what I did when I was a 20-year-old. I thought that I could trade every single day. And that's problematic when you don't know how to trade and you have a lot of time or lack of self-control. And that's why I was blowing accounts when I was 20 and 21 and 22. That fevered pace of I gotta do it, I don't want to miss that next move. When hopefully you've seen now enough instances where this pattern repeats a lot over the course of a month. It's in most markets a few times a week. But if you notice, those moves are occurring when there's a high impact or medium impact news driver on the FNL calendar. So it's something you can plan for. You ever hear the old cliche remarks of books and educators? They say, plan your trade and trade your plan. Well, this is how you can do that with that model. You look for the FNL calendar, the time of day, what kill zone. In the market, you're expecting an expansion higher or lower on that weekly chart. There it is. You're looking for these things to repeat. And if you start journaling these things, you're going to notice that the setups, this is one of the epiphanies, okay? Because I know some of you just don't want to do this, but now because I'm going to tell you, you're going to go into it hopefully and see that what I'm saying is true. If you backlog every day, show everything that took place, mark up your charts, as I'm going to show you some examples in here. When that happens over time, you're going to see that the best setups occur when these calendar events are in play, and they originate around that same time. And what will happen is it'll convince you to say, okay, I don't need to be the everyday trader. I don't need to be in here being a super scalper. I don't need to be in here trying to be an Olympic trader, because trading is not an Olympic sport. It's not an Olympic event, and they don't give out gold medals for over trading. But they do blow accounts. So eventually doing that enough, and if you don't know what you're doing, you're going to blow your account, and that's hopefully what I'm trying to prevent you from enduring. All right, so we're looking at the hourly chart here on the S&P. Obviously, we've traded down. We left relatively equal lows, but this low went just a little bit lower than that one. That's all we need to hit that, and it started retracing higher. This movement here, that's whipsawing both sides of the marketplace. Sell side taken, then buy side taken, and then it broke down. Whenever I see price action like this, I ignore the both side type movement. Usually it's FOMC or some kind of rate announcement type event, and that's what you're seeing here. When I see that, I ignore that wick, and I ignore all these as well. The real range is here. This is manipulation. It's already done. It's not going to hurt you. Focus on this swing here. So when the market drops down, it creates this low, runs a little bit lower. We're consolidating. We had a holiday on Monday. The market starts to drift higher. And what I'm concerning with this run here is this high to that low, and I'm getting my range. Equilibrium is here. So if it's going higher, what's it reaching for? Well, it's going to go into a premium. And then this right here, this inbound, I'm not really interested in that one because it's overlapping with that equilibrium 50% level of the high to that low. So I want to see it dig into a premium. So even if this is going to go up to go down, I want to know, do I have an opportunity to see it go up into this area here or maybe even up here? So we'll use the first low-hanging fruit approach here. So if everybody got there, inbound sell side only, the market's going to revisit that area. This is exactly what I teach you. This is exactly what happened. Look at the bodies of the candle. Yes, there's a little bit of movement just above this candle's low, but look at the bulk of these candles, the bodies. They're staying within that range that's defined by what I teach you. So if everybody got in a premium market, what makes it a premium? It's above the 50% level. So it's going up into that level here and it's consolidating. On the 15-minute time frame, pause the video, look for what you can identify based on your understanding and experience learning under me so far. Okay, if you need more time, pause the video.
All right. So market opened at midnight, came back down into this bullish rally gap, pushed up, check out these highs, came back down into what? This fair value gap. Pushed up, consolidated, technically came back into this fair value gap here. Pushed up, took the old highs or these equal highs here, which is in the fair value gap, I guess. We then we don't displace here. Okay, balance here. Yeah, we don't have any market shift to the downside, but the setup is nice. I'll be waiting for price to take out this low right here, which it has. And it did it with this kind of leg here, but it's not the cleanest displacement. I don't know if I can count that, but yeah.
All right, so here's midnight, near block time. We had a fair value gap here. Bullish order block, these last 3 down close candles. That's one consecutive order block.
I don't know if it was bullish or bearish, so I was just, because it was just giving like the bias here, but I don't know for the actual chart if it was bullish or bearish. So I ignored that, but I was focusing on the points he made. The bullishness was just me actually anticipating sells, but because I know that this liquidity he talked about, so I was assuming he's looking for sells, but I couldn't see any, so I didn't. So maybe you can argue this displacement here, but I didn't take out the low down here. Maybe it took a low out somewhere here, but it's 5 o'clock anyway, so that's why I couldn't argue any sells, but I saw the pattern of price using these fair value gaps to go to the upside.
It digs into the order block with the fair value gap, hits that during the London session. It rallies up, we create a fair value gap here, it runs buy side here, and then creates relative equal highs ahead of the New York session. So the market drops down, goes into the fair value gap here, into the last down close candle, bullish order block there. That's where you could be a buyer ahead of the 9:30 opening. Why would you feel confident to do that? Because we already have an energetic price run from London.
And it's also around the New York. I mean,
market started
midnight open.
At midnight and went where? Did it go up? No, it went down into an imbalance, and then there was a lot of energy off of that. So the market created a short-term shift in market structure here that's bullish. London creates the higher low most of the time. 70% of the time, you're going to find that that is true if your directional bias is correct. So I'm trusting that that low is probably pricing in the daily low. This retraces into the New York session. We're trading into an order block. We close up this fair value gap, and we rally a little bit and drop back down into the fair value gap once more, create an optimal trade entry. That's not what we're going to focus on this one here. But we have the New York AM session beginning here from 8:30 in the morning to 11. This is specific to index futures for the morning session. This is the upper level on the fair value gap on the hourly chart, and this is the lower level on the hourly fair value gap. So it's your target is going to be draw on liquidity. The market runs from the fair value gap here to the low of the fair value gap on the hourly chart to the high of the fair value gap on the hourly chart after clearing buy side liquidity. On a 5-minute chart, There's a lot of things going on here. You can see we have a low, and we ran that low once more. Then it rallies and moves up away from the order block, and then back down into the last closed candle on the 5-minute chart. So there's an hierarchy of how the market's trading down into a higher time frame, to a lower time frame, to a lower time frame, all being supported by down closed candles within the bias that's bullish. And once fair value gaps are being closed in, the market goes higher. So it's signaling to you, it's indicating to you that you don't need an indicator. You don't need some wonky little gimmicky candlestick replacement. Okay, the candlestick is telling you everything you need to know. You don't need to have any kind of indicators, no moving averages, none of that garbage. Okay, everything is being shown here in price action relative to time and price. So we have the market starting with a run from this low with a lower low. So what took place here? We'll come back in a minute. The market comes back down into a short-term discount relative to the low to the high here. Discount rallies, and at 9:30 it's consolidating, and then it starts to run. Reaches forward the last liquidity here, the low of the fair value gap on the hourly chart, and the high of the fair value gap on the hourly chart as draws on liquidity. 3 targets all hit. I'm going to zoom in. This is a zoomed in chart of the session that starts at 8:30 and going into the 9:30 opening. So we have the low here, lower low into the order block. It rallies, short-term shift in market structure here, comes back down in. There's an imbalance or fair value gap here. These levels are based on the 5-minute chart. So even though we're looking at a smaller time frame than that, that's what we're looking at. We're going to refine that down into this particular time frame. So inside that, let me go back one more slide. So inside the fair value gap, we're dropping down in here, but we're doing it into this fair value gap there. Down close candle, that's order block, and fair value gap. There it is. You can buy this right there and trust that it's not likely to take that low out. Why? Because we already have stop running event here. Low, lower low. Sell side taken, reaction. Off the order block, we're into the fair value gap. We rally once more, we create a fair value gap here, drop down that left down close candle. You can be a buyer there. There's buy side liquidity. Rest of that's going to be your initial draw liquidity. So that'd be a first partial. If you want to add, if you want to pyramid the position, you can add that as it starts to run up higher. But I want to show you the low to the high here. That's 50% for equilibrium. Market drops into a discount prior to that run up here. This consolidation at 9:30, we see it taking off here. It's already done the move of manipulation, knocking people out, retracing, then off the races.
So his confidence for entering this trade was the fact that there was already manipulation, number one. Number two, for you to actually get into compounds, he wants the liquidity run to go on for a little bit longer. And then, of course, you have that bigger range to have a pullback into. But that's powerful in the sense that we have the idea of price coming back into the discount area, but we're confident because we've already had manipulation, which is the event of taking lows or sell side liquidity. So like here, we had equal lows here. In this event, we took out our lows, but you also notice down here, we had this open up, push to the downside. We took out lows, and create equal lows here. So these two lows here were taken out. What does this look like on a larger time frame? What is this? Like they were 1 or 2 minutes. I think it's 2 minutes. No, 2 minutes, unfortunately. But yeah, we take out this low right here, and then we push up. Also take out this low right here, which lines up with the idea that we had. So